Okay. Let's get that music back up and running. Shout out to everybody here. I made gains since you've last seen me. I pulled out a nice $500 win overnight while I was sleeping, banged on them. I'm going to show you how I did it. I actually did it last night. It took me about 45 minutes to make 500 bucks. I'm going to teach you how I did it. I'm going to show you what's going down. We're going to break it down. We're going to have some fun. Shout out to each and every one of you for being here. Put the lemon into the water as I just did. Stay decalcify that pineal gland. Let's take a big sip of the lemon water. Let's get ourselves situated. Thank the dear Lord for this beautiful day in which we've been given. What a blessed moment we have, full of opportunity, life, love, and happiness. Every single moment we can fill it with every single thing we have, baby. Let's go. I'm super excited to be here with each and every one of you, motivating you, keeping you going, keeping myself going. Every single day, we do not take days off. No days off of this channel. You expect to see me, I expect to see you, and that's how it's going to be until I'm taking off this beautiful earth. On to another realm. Shout out to everybody. God bless my mother and father, Jimmy and Irene, my best friends in life. I lost my parents in the last couple years. It's been tough, but hey, you push through no matter what. God bless each and every one of you. We're going to break down Bitcoin right now, what I'm seeing for you right off the bat, because I know you're like, you're stressing. You don't know what's happening. We're looking at this symmetrical triangle for Bitcoin. Ping seems to have made somewhat, of a resistance off of this area. And then we've had a bit of a bounce off this bottom trend line. To me, these mainly break to the downside. We got rejected by the 200 MA on the 15-minute, which was pretty whack. This morning, it was pretty bold. We were looking at this flag. You can kind of see how it made almost a bit of like a shoulder, a head, and a right shoulder there, you see. And I'll tell you what happened is my go-to signal. I got stopped out of break even, but I was up. But the idea was this, right here. Boom. I had been in the trade basically from last night, just to make it clear. But see how we lost the 1 minute 200 MA? And boom, that was it. So shorting the lot, and again, if you flip that upside down, that's my exact strategy when we long. How many days have you seen us cross the 200 and we're gone? Boom, right? Just an absolute explosion. So, remember yesterday I said I was going to do this in-depth and like tutorial on the 200 MA? I'm going to do that today. I will remind myself right now. I'm going to take a card here and I'm going to put it up. And that's going to remind me 200 MA. I got to do the 200 MA. Very, very important. And you always got to wear your rollie, not even if you want to wear it, because you got to make sure it keeps time, right? So even if you don't, some days I forget, I put it on almost as a chore. I have to wear this thing. I don't even want it. And live by society's rules and have some type of shady status symbol and oh gosh. But it is what it is, I guess. If they're going to keep printing money, you have to buy things that are going to appreciate in value. It's not my fault. If they didn't print money, I would never buy a Rolex. If the dollar kept its value, there'd be no reason to buy a Rolex. The only reason you buy a Rolex is because they print money to zero. And looking at coins is fun. Making investments is fun. But some investments you want to kind of have fun with. And to wear an investment, it's kind of a cool and interesting prospect, right? Especially to a creative guy. So to me, that's fun. Art, watches, that stuff is kind of interesting if if you feel the need. So look, above the 200 MA and you pump to the upside. Look, and that almost looks like a flag could continue. See what I'm saying here? But the point is, we're upside down. And we're talking about shorting when you lose the 200 MA on the 1 minute time frame. And look, boom, you were gone, baby, gone. So we're going to break it down. I did a top-down analysis this morning, but honestly, things have changed. Like, it doesn't look the same as it did earlier. So let's break it down. Let me see what's happening. So, of course, you could say that's a high, that's a low, that's a lower high. If you want to be a bear, I can be a bear and a bull. And we can kind of look at both scenarios and then pick up the highest probability. That's what I do. I know nothing but the fact of my own ignorance. I have no idea where Bitcoin's going to go. No clue. They could tank us down to 67,000 in the next 2 weeks. They could pump us up to 115. I don't even like having an inkling. The old me used to be like, oh, I know where we're going. We're about to do this. Every time I do that, I got to just keep telling myself, I know nothing but the fact of my own ignorance. I know nothing but the fact of my own ignorance. I know nothing. I must constantly humble myself. As a trader, you get on a roll, you start hitting a bunch of trades, and I'm closing my eyes because I want to see my past self and look down on myself and say, don't you dare. Don't you not look down on myself, but actually look at myself and say, don't you get hot on all the, your channel and the lifer and the voice. And no, man, why don't you calm down, Sam? Why don't you humble back to your days on a bicycle when you were 12? Why don't you remember what it was like to be on that night shift when you wore the same pair of jeans every day? Why don't you step back for a second and remember what it was like to have not a dime and to be in credit card debt and to be wondering where your next move was going to be on a night shift, making $175 a night. Some people say, hey, that ain't bad. In New York City, it was pretty beat. And I got out of college. I was 30 years old. I just got fired from 2 of my last jobs. I got laid off. I didn't seem to be pretty good in corporate America. It wasn't working out for Sammy. I'll tell you right now. I was 31 years old with a college degree, in debt, not a lot of confidence in myself. But I always had this belief that something big was going to happen to me, and I was always trading on the side, and I was always doing something on the side. But man, I'm telling you right now, the Lord saved me. I met someone yesterday, and I was like, the good Lord saved me, man. I said, I submitted to God, and my whole life changed. I said, I submitted to God, and everything in my life just seemed to click. My wallet got bigger. My heart got bigger. The people in my life became more exciting and exuberant. My relationship with my wife became funner. The relationship with my children became far more meaningful. Everything in life had a deeper sense to me. And I began to grow and break out of that cocoon of my old ways, you know? So that's what I want for you. So let's take a look here at the weekly time frame. But remaining humble is the key. No matter how much money you make here in the space, it's about resetting back to those days, reminding yourself of where you came from, and never, because I believe we're all going to get filthy rich here together over time. If you stay as consistent as me, oh my gosh, the money is coming to you. The money is coming to the consistent. And it will leave the hands of the lazy, my friends. So put a 333 in the comment section if you're a consistent person. If you show up every single day, if you go after what you love, and if you believe in yourself. I want to see a 333 in the comment section. Fly, peacock, fly, baby. I love it. How many people here believe in themselves? How many people want to change their lives? How many people know that this is the day, today's the day you're going to change your life forever? All right? And it's going to be with technical analysis with B, because you've chosen, you love TA like I do. You have the TA bug. You just can't seem to get enough of it. All right? Shout out to all the 333s in the chat. Let's get the likes up to the watchers. I would greatly appreciate it. You people are the ones still standing. They have blasted a lot of people in the last week. And let's jump back into this TA. So beautiful higher low here for the weekly. And bang, right? So this still is intact. I'm not saying it's going to happen for sure. We could be, I just want you to understand, we could be down at 68,000 in 2 days. I know nothing but the fact of my own ignorance. I have to repeat this over and over again. I am just going over the measured move if this decides to bounce off the higher low, which so far it may if it can close. Yesterday we were going to close bullish engulfing, right? Things looked a little better. Even this morning, I think it was bullish engulfing. Yeah, right? Not the case right now. So in the last couple hours, a few things have changed here for Bitcoin. And people want to see Powell. Let's jump on into Powell here. All right. Let's see here what we got going on. All right. We got Powell testifying here with Bitcoin.
May. We will take on board lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer.
I sneezed or something there.
Let me conclude by emphasizing that at the Fed, we'll do everything we can to achieve our dual mandate goals that Congress has set for monetary policy.
Never get to 2%.
To supporting maximum employment, bringing
too much
inflation
square out there.
sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thank you, Chairman Powell.
From the script.
Your words and your actions.
It's pretty boring. I mean,
global impact. You have the opportunity and responsibility of leading this country in the right direction economically, and I thank you for your commitment to having a conversation with all of us about how you do that well. You and I had a conversation yesterday. Some of it was frustrating, some of it was illuminating, but in the end, my goal is to make sure that the American people, and specifically those working paycheck to paycheck, have more opportunities to succeed, not fewer. You have said that the Fed is not against innovation, and banks are perfectly able to serve crypto customers as long as they understand.
You said crypto.
Yeah, you have admitted that the threshold has been a little higher for banks engaging in crypto activity.
Bearish retest of a bear flag. See,
on debanking,
95.98.
Heard that federal banking agencies,
he said crypto.
The Fed, use reputational risk as a tool to encourage the debanking of certain legal industries and law-abiding citizens for political reasons not tied to safety and soundness. Debanking is a top priority for this committee, and it certainly is for me, and one that I believe is a bipartisan issue.
I was debanked.
Will you commit to working with this committee to end debanking, including working with the new vice chair of supervision, once appointed, to revise the Federal Reserve supervision manuals to remove reputational risk as a tool to weigh in on political topics?
I'm happy to make that commitment.
Thank you, sir. Accountability is very important. I would like to think accountability is a priority for everyone, especially the Fed, given that failures in Fed supervision can
We have Bitcoin here on the 1 minute chart on the right.
Dollars.
We have Bitcoin here on Bookmap on the left.
Silicon Valley Bank.
We got the action here
which was in
the middle, and we got me.
Regulators to identify egregious mismanagement,
I'll shut up now.
Interest rate and liquidity risks. We have yet to see any regulators be held accountable. And as you recall, that was a point of my frustration. As a guy who spent a lot of time in the private sector, 15 years running a few businesses, I can tell you that accountability is a necessary part of making the entire organization healthier and perform its job as well as possible. I'm encouraged that the FDIC has begun the process of holding SVB executives accountable. That's good news. But no Fed employee has been fired, put on probation, put on performance improvement plan, all of which would be expected in the private sector, as I just mentioned, for employee failure. Please explain to me
possible inverted head and shoulder here on the 1 minute.
To a different standard from my perspective than everyone else. And what are you planning to do to take accountability for Fed failures in supervision?
So we've actually done quite a lot.
Nada de nada.
In response to the events associated with Silicon Valley Bank. So we've done many, many things. In terms of specific accountability, what we found was this was not a case of malfeasance or nonfeasance so much. It was a case of people were carrying out a specific playbook that failed to cause us to act in time for these things. So it wasn't actually particularly fair to the employees to say you violated our practices in some way. That wasn't really what happened. What happened was, I would say, a lot of focus on process and on governance and controls, and not enough focus on basic bread and butter banking, credit risk, liquidity risk, interest rate risk, things like that. So as we discussed yesterday, we took...
Always gets me hungry when people say bread and butter.
To avoid further spread of those issues, and that was successful. But I understand your point on accountability.
This is one of the areas where you see...
I'm thinking about the nice butter with the little garlic and salt.
Safety and soundness, and with the number of MRAs that when really documented but no action was taken, that leads me to the conclusion that individual employees, supervisors, should have been held account for that. I'll move on, though. In the past, you've supported tailoring regulations so that we ensure banks of different sizes thrive and to preserve our diverse banking system. Will you commit to working with me as chairman to make sure that financial regulations do not impose more burden than is necessary? I'll say that this comes after a number of conversations with community banks and regional banks that have continued to stress that the cost of the regulatory framework around them isn't just harsh, it's oppressive. Larger banks suggest that the cost per employee for the regulatory framework is $10,000 per employee.
Bit of a cup and handy here.
I think we can do better, and would love to hear your thoughts on that.
All right, first of all, I will commit to working with you on that. We do try to...
Try. Worst word in the English language, don't use it. It means you're not going to do a dang thing.
Frankly, on debanking.
It gives you an out not to do it.
We'll see both...
Don't use that word.
Hearing and on the one on the House side, we hear a lot of people talking about that. And, it's time to take a fresh look, I think. We don't intentionally do these things, but sometimes regulation leads things to happen, and we need to be...
Figs on toast. Okay, you're a high-end guy.
I appreciate that, and I'll turn it over to the ranking member. I'll say this. After having a number of conversations with CEOs of banks around the country, one of the things that was made clear to me with specific statement from these CEOs is that the regulatory, OCC and other regulatory agencies said specifically to debank certain industries. And that is the point that I'm making, and one that I think we have to solve. If it's legal in America to do business, we should do our part to make sure that they're banked.
Thank you, Mr. Chairman. So over
Oh, no.
Co-President Musk and acting director effectively shut down the CFPB. No more cop on the beat looking out for a family of 4 in South Carolina facing an illegal foreclosure. No more cop on the beat looking out for your grandma whose bank account has just been taken over by a scammer. No more cop on the beat looking out for
This woman makes $400 grand a month. You know that, right?
Giant credit card companies
400 grand a month
that are charging illegal junk fees. It also means that the CFPB is no longer doing one of its most important
May God bless
jobs.
her, man.
Examining big banks to root out illegal conduct before it happens, or at least stop it before more people get hurt. Chair Powell, if the CFPB isn't on the job right now, then who is administering JP Morgan or Wells Fargo's consumer compliance exams to ensure that they are following the law?
Senator, I believe that, and you would know, that Dodd-Frank moved all authority for examinations in the consumer space.
Cup and handle to the upside. That's what Sammy's telling you. Let's see what happens here.
We'll talk about that in a
Right
sec.
shoulder.
The answer to my question, please. If the CFPB is not there examining these giant banks to make sure they are following the laws on not cheating consumers, who is doing that job?
I can say no other federal regulator.
No one, in other words. So thanks to Co-President Musk and CFPB acting director vote, Wall Street banks no longer have to show the bank examiners that they're not illegally opening accounts people didn't ask for, like happened with Wells Fargo, or charging illegal junk fees like the Bank of
I mean, she might have a
America
point. You got to be open-minded.
The CFPB has jurisdiction only on banks that have more than $10 billion in assets. So what's happening in thousands of community banks all around the country, those that have less than $10 billion in assets? So, Chair Powell, as you know, the Fed oversees consumer compliance for state member banks that have less than $10 billion in assets. Has the Fed suspended consumer
She took so much money from Big Pharma, man.
for those smaller banks? Or is the Fed still on the job to make sure that those smaller banks are following consumer financial laws?
Still on the job, business as usual.
All right. By forcing the CFPB not to do its job, President Trump, Elon Musk, and the author of Project 2025, Russ Vought, are giving Wall Street banks an unlimited get-out-of-jail-free card so they can cheat working families, even while community banks continue to play by the rules. You know, for any Americans who have money deposited at JP Morgan or Wells Fargo or any other of the giant banks, they should now know that there is no one on the job to make sure that those banks are not scamming you. Only
There was no one on the job in the first place.
Now have a
In the
call
last
on
4
the
years, the banks
to
went
make
down.
sure
Who
that
was
they
watching them
are
then?
cheating
What are you
consumers.
talking about?
You know, if I have my money in one of those giant banks,
Yeah, that's why we
think about going to a smaller bank where the protection, at least right now, is a whole lot better.
That's why we own Bitcoin.
Now, at the same time,
And that's why we got into Bitcoin at $1,000 a long time ago.
The Fed is buckling to pressure from Wall Street to erase other safeguards.
Like, we already
for the
got
too
rid of
big
that
to
issue.
fail banks. During the first Trump administration, under your leadership, the Fed weakened the big bank stress tests, including by giving the big banks some of the answers to the test in advance. I called you out on it, but you promised right here in this committee that you would not give those banks the whole answer key. I'm going to quote you back. You said, complete
It's technically
knowledge of the
asymmetrical. It could go either
models
way
could
here.
lead to a model monoculture in which all firms have similar internal stress testing models, which could increase the correlation of risk in the system and miss key idiosyncratic risks faced by the firms. I agreed with you. But several weeks ago, the Fed announced that it has plans to do exactly that. Hand all of the answers over to the giant banks. Chair Powell, why is the Fed about to propose a rule that directly contradicts your own testimony and in your own words would render
Watch how he does. Watch what he does. Watch how he nails
toothless?
this. Watch how he puts her in her place.
In essence, because the ground has shifted very substantially in administrative law, and we actually want the stress test to remain resilient to that. And so we're making changes to accomplish that.
Well, the changes are changes you've identified earlier as making those tests toothless. Look, the big banks are going to juice shareholder payouts and leave this economy more vulnerable to a crash. The Fed is knuckling under to bank lobbyists. We know how this ends. People will suffer.
This time frame's the 1 minute chart.
Get bailed out. I urge you, Chair Powell, to serve Main Street instead of Wall Street. Don't weaken these rules.
Thank you. Senator Rounds.
Thank you, Mr. Chairman. And Mr. Chairman, thank you for coming before the committee.
She makes $400 grand a month.
With you. I've got a series of questions, but I
just remember
would like to give you an opportunity if you would.
She makes $400 grand a month.
Suggestion that the ranking.
I'm just. You can look this up, right? And God bless her. I'm not, man. You know, maybe she deserves it, but I just want you to understand.
Now, any change in the laws regarding how they're supposed to be treating the individual consumers out there, or anything along that line?
I'm not saying what she said wasn't true. I just want you to understand everything where it's coming from. Okay.
Not that I'm aware of.
Are they still audited, and do they still have the regulators in watching all of their businesses just as they did before?
Well, they'd have all the regulators except for the CFPB.
Very good.
If in fact, in the hypothetical, the CFPB.
No, I didn't say it makes her evil. I'm not saying that.
Anything else you'd like to add before we move on?
No, I'm good. Thank you.
Thank you, Mr. Chairman.
She's not totally in touch with the working class.
As we continue to prioritize the stability and the resilience of our financial system, the ongoing Basel III rulemaking process has remained front and center in shaping our regulatory framework. I guess I was rather outspoken with my opposition to the original proposal, and further work was stalled at the end of the last year. I guess my question for you today, sir, is could you provide an update on the Federal Reserve's progress in finalizing the Basel III endgame rulemaking process?
I'd be glad to. So we remain committed to completing Basel III endgame. We think it's
what kind of watch does he have on? Anyone know?
Good for our economy.
What kind of watch is that? What does he rock? What is Powell rocking?
Beneath which foreign banks can't fall.
I just would love to know what do you think it is? Is it a Breitling?
Committee approach. So
what do you think he rocks?
Where it sits now is we await
it's a rollie?
Is
that a Submariner? White gold?
And that seems to be happening. And when that happens, we're going to sit down with them and work our way through to a Basel III endgame proposal. And I think we can do this reasonably
Looks
quickly.
like a Submariner, right?
That is compliant, consistent
Maybe a yacht
with
master
requirements, and also consistent with what other large jurisdictions.
Oh, he's balling out. Look at that.
I'm optimistic that we can do that fairly quickly, and we're committed to doing that.
We always wanted our banks to be competitive with European banks. And I'm just curious, the original proposal that was in front of you, and I'd like your thoughts on this, it was estimated to increase our bank's capital by 19%, which I think may very well have created a potential disadvantage within the U.S. institutions.
GMT Master 2. It did look like a GMT.
With any new proposal, what's your thoughts?
Trump came out with Trump watches.
This would be a neutral approach with regard to capital?
The main commitment I'll make is
Bitcoin in the back.
Work together with new leadership at the other banking agencies to do something.
It says Trump, crypto president.
You know, I've said many times in this committee that I think that the level of capital in the
someone gave it to me as a gift. I didn't buy it
outright, and so it'll shake out somewhere in that area. I would
Our
guess.
expectation would be, and the markets would expect that it would be neutral with regard to capital
in that range. But I want to defer to our new colleagues and get their views as well. But that's a good starting place.
Okay, thank you. The Federal Reserve's partnership with the U.S. Treasury plays a central role in supporting our nation's payment infrastructure, which processes a vast range of daily transactions, from federal benefit disbursements to debt obligations. Could you outline the Federal Reserve's role in supporting and managing the Treasury's payment systems, including how the Fed works to keep these systems secure, efficient, and capable of handling the government's high volume of daily transactions?
So it's a complicated.
Watching the 1 minute here at inverted head and shoulder for Bitcoin.
Quickly, effectively,
Kind of is a symmetrical triangle, 96.3 or 97.7.
The agencies carry out those spending orders, and when the way they do that is they send an order to pay.
Yeah, you can really see it.
A recipient to the Treasury Department. Upstream, before it gets to the Fed, all of these decisions are made about: is this an appropriate order? Is this payee on the don't pay list, and all those things. Once all of that is set, it comes to the Fed, and by that I mean 4 or so of the reserve banks, and we actually make the payment. We take the money out of the Treasury General account and we make the payment. We make no judgments whatsoever. Those are all made upstream from us, and we are in fact the fiscal agent of the Treasury.
Confirmed for me
Yeah, it's
today.
a sub.
Is the system safe today?
That's a
I believe
rollie.
it is, and I will tell you, we are very strongly committed to the integrity, efficacy, resilience, and all those things of this system. And people do depend on this in a big way, and we're committed to that.
One last question for you, sir. The failure of Silicon Valley Bank, and the chairman brought this up. I'm just curious, recognizing a lot of banks out there looked at this. It cost the other banks in the system a lot of money to pick up the costs involved in the losses. Nobody's been fired, but you did indicate that it was a failure in the playbook. Has the playbook been revised, or can we expect
I got
it
a
will
date
be
just.
revised?
In a lot of ways, it's been revised. Yes, I can go into some details. I mean, we're one thing that didn't happen was, for example, the supervisors didn't follow through aggressively enough on things that they'd said. If they'd done that could well have been enough to stop it. Yeah, but a lot of it was
This looks
just not focused.
A little more bearish now that we have it. We're rolling over.
What
See?
was a very large amount of interest rate risk.
Now it's kind of Adam and Eve. See that? Adam and Eve.
Matched up with an unstable funding base. And somehow people wrote about that, and not the Fed, but others wrote publicly about
Need to
this.
bounce.
Somehow,
If we cross the 200 MA, I may long,
outside of a
right?
crisis in this country, and that's what that was.
So I'm just watching for signals and
Bank
signs.
runs are incredibly damaging.
When I get the right one, I know when to do
Everyone
it.
learned a lot from that and is determined to do better.
Thank you, Mr. Chairman. I think this is one that I think, as you appropriately pointed out, I think this is an area where a lot more questions are out there yet. And I think if it's the playbook that was
Sorry, that was
problem,
loud.
I think perhaps a discussion about how that playbook has been revised would be appropriate in the future. Thank you, Mr. Chairman.
Thank you. Senator Cortez Masto.
Chairman Powell, thank you, and thank you always for the conversations in between these hearings as well. Let me focus on a
And the
couple
back
of things
door,
that are concern.
behind the
touched on a
scenes.
little bit of this, and I think this is important to clarify. There was a change in the law when the CFPB was created. The CFPB examines the banks and enforces the law, whereas the Fed only supervises those banks. Is that correct? Or how would you determine that relationship?
With the CFPB? So Dodd-Frank took a lot of the consumer compliance jurisdiction away from the other banking agencies and gave it to a newly created agency, the CFPB. We retained a residual amount of that, as we just discussed, which was banks under 10 billion in assets. But the CFPB essentially took all of that when Dodd-Frank came into being.
So as it was created, when you two were working together, the Federal Reserve collaborated with the Consumer Bureau when supervising those large banks, correct?
Yes, we still retain supervision over all the holding companies and also of Fed member banks.
And let me ask you this then, does the Federal Reserve
Yeah, see, we're losing the.
protection laws now for...
We lost that trend line. We're about to dump.
Not for money.
That would be
It's
the-
very likely we're going to dump right now to 96.6.
And
right.
so
And
when
then
we're
down to
talking
96.3.
about, collaborating with the CFPB.
Bookmap's got 96.5 right
for
there, seeing
financial
96,000.
technology firms, what would the Fed Reserve now do that if the CFPB, if the hypothetical is the CFPB no longer exists, what would be the Fed's role right now?
There's the
with
drop.
respect
See the
to
Adam and Eve
technology
double top?
We don't have jurisdiction over, we have jurisdiction over banks and some
And
financial
that's
market
it.
utilities.
So let me ask you this, because I know there's a number of Nevadans who file consumer reports of concerns about fraud and predators with the CFPB. The Fed Reserve doesn't receive those reports, correct?
No, I don't believe
And
so.
you have no role when it comes to consumer protection like the CFPB does, correct?
Unless you're a a Fed member bank that has 10 billion or less in assets, then we have jurisdiction.
Right.
On a
So there
consumer.
is a gap. If the hypothetical is true and what we're hearing that the CFPB is being shut down, there is a gap, what we're hearing in enforcement out there, and particularly when it comes to consumer protection. Is that, would you say that's true?
Yes, for all banks that we don't
Yeah.
supervise.
And I think that's the concern we're all having right now, is this concern of when we're looking to streamline government. And listen, I'll be the first to tell you, there's a lot of bloat. We need to streamline it. We need to address regulations and overreach. But there's a strategic way to do it, and not this burn down the house that is going to harm people across the country, including in my state, those Nevadans that are looking for some sort of enforcement around consumer protection law. So that's what you're hearing from many of us on our side of the aisle here.
Can I just very briefly add that we do have some residual enforcement authorities, but what we don't have is examination authority, and for the banks that the CFPB supervises.
Thank you. Let me ask you this, and we talked about this over the phone, and I understand it may be difficult to answer this, but the Federal Reserve Board members have been clear that future interest rate cuts are unlikely to happen despite the strong economy. But there are folks in my home that are
Nice little bounce
in my
there.
state that are waiting to buy a home. And we know that's still an issue.
I wouldn't trade this. I'm just watching it here.
Right
But if we
now
cross the
for
200,
home
you know.
affordability, you add the interest rates to it, it is a problem. So do you think it's most likely that interest rates will remain above 6% for this year, or can you even address that?
What?
So overall, the economy.
Have you ever watched him
is strong.
make a clean answer like that? Why would you?
The labor
he's-
market is also very solid. Unemployment at 4%, quite a low level. Inflation last year was 2.6% for the year. So we're in a pretty good place with this economy. We want to make more progress on inflation, and we think our
See, that's
policy
bearish for
is in
Bitcoin
a good
when he
place,
says that.
And we don't see any
No
reason
rate
to be in a
cut.
hurry to reduce it further. As it relates to housing, so it's true that mortgage rates have gone or remained high, but that's not so directly related to the Fed's rate. It's really related more to long-term bond rates, particularly the Treasury, the 10-year Treasury, 30-year Treasury, for example. And those are high for reasons not particularly closely related to Fed policy. They may remain high. I think, once we lower rates and kind of rates return to a lower level, mortgage rates will come down. I don't know when that'll happen. And even when it does happen, we're still going to have a housing shortage in many places.
Thank you. Chairman Powell, thank you again for being here.
Go either way right now, so be
Next one,
careful,
Senator Kennedy.
especially here.
Thank you, Mr. Chairman. Thank you, Mr. Chairman.
This is my
for being
boy.
here.
This guy's crazy.
Okay, great. Yes, ma'am.
My friend, our ranking member, said that you are knuckling under to the big bank lobbyists. Is that true?
No.
I will tell you, I'm going to talk about this later about the CFPB, but there's a point here.
To me, that the big
I've been Dodd-Frank supporter my whole life, since I knew about it. Anyway,
unnoticed. Do you recall a year or two ago when inflation was raging? I think its peak was about 9%. Many economists and other experts, based in part on history, said that you were going to have to provoke high unemployment and put our country into recession in order to get inflation down. Do you recall that?
Very, very well.
yeah, 100%.
Are we in a recession?
We are not.
Would you, as an American, trade places right now with Germany in terms of the economy?
No,
No,
I sure wouldn't.
How about China?
no,
Wouldn't trade places.
nope,
How about France?
no way.
No thanks.
Things aren't perfect. Inflation's obviously still sticky, and long rates are too high, which I want to talk about in a second. But the fact is, knock on wood, we have experienced a soft landing, haven't we?
Not for me to say, really. I'll let others
Well, have
make
we
that.
experienced a hard landing?
No, we sure
Are
have.
we in a recession?
No, we're not.
I call that a soft landing. And it seems to me that you and some of the ladies and gentlemen who are your colleagues at the Federal Reserve behind you deserve some credit for that.
Thank you.
I don't know why you don't take the credit. Everybody else in Washington, D.C. does.
Because then he has to take the credit when it dumps. That's why.
Again, I'm not saying things are perfect, but I never imagined that our landing could be this soft, albeit not perfect. And I wanted to thank you and your colleagues for that effort. You sure didn't get any help from Congress and on the our president on the fiscal side. I don't expect you to comment on that. You and the Federal Reserve can to a large extent
Only
control
do so
short
much.
rates, can't you?
Yes.
Through the Open Market Committee. You can't control long rates, though, can you?
No, we can't.
Why is that?
So a lot of things go into long rates, and one of them is the expected future short rate of Fed policy, but many other things go
I
into
just see 97
So
flashing again there.
inflation in the longer run,
Looks like we're breaking out here, folks.
sort of risks around
Taking the upward
around
channel
the economy
here.
and around the budget deficit go into something called the term premium, which is the part we can't explain.
We cross that 200, we'll get a bit of a move here.
Compositions. And so, it's set by supply and demand in the bond market at the long end, and we're not particularly. We have some influence, but mostly not.
Many Americans are looking at short rates and looking at the Fed's behavior and how you reduce inflation, but they don't see the long rates going down, and obviously that affects mortgage rates. And I would encourage you and your colleagues to spend some time explaining to the American people why that is. Final question. If you went home tonight and Mayor Powell, your spouse, said, I got a call today from our bank, and they're debanking us. They're worried about their reputational risk because they don't like our politics. Would you think that fair?
No, I sure wouldn't. And as I mentioned earlier, I too am troubled by the quantity of these reports, and really want to understand better why this is happening. One theory is that banks are just very risk averse around BSA and money laundering, and that's because we're so tough on them, and that they just don't. Any red flag is enough. But it may be that this whole thing with reputation risk needs to be thought about. It's actually coming out of our one manual that we use. We're taking that concept out of the manual that we've been using for account access for master accounts. We're just going to take that out. But I think this needs a fresh look, and I think it's time for that, and we're gonna do that.
Well, I've asked our chairman, and he has agreed to invite some of the CEOs of some of the banks that have been debanking people. The CEOs,
Yes.
not their lawyers, not their PR consultants,
Not the lobbyists.
not their priests, them, the CEOs, to come in and let's talk about this and find out what the hell's been going on.
Thank you, Senator Kennedy.
Thank you, Mr. Chairman.
Senator Reid.
Thank you, Chairman Scott. Chairman Powell, welcome. Thank you very much. I think your monetary policy combined with the Biden fiscal policy over the last 4 years has made a tremendous difference. We've avoided a recession. And I'd like to remind people how far we've come. In 2020, the gross domestic product decreased 2.2%. The unemployment rate finished the year at 6.7%. By 2024, Gross domestic product grew 2.5%. The unemployment rate was 4.1%.
Looking for this shoulder
Labor
now,
force
this head.
participation rate went up from
This guy will put you to
61%
sleep, honestly.
60.5%. And that's a combination of your work.
He doesn't want to open
fiscal
too much of his mouth to speak, so
Thank you
he's
for that.
just going
One of the issues before us today is the issue of tariffs. In the July 2018 testimony, you stated, Mr. Chairman, countries that have remained open to trade,
This guy a ventriloquist or something?
including tariffs, have grown faster and had higher incomes. Do you still believe that?
Yes, I do. I would stand by that.
So President Trump's tariffs on China, Canada, and Mexico will obviously raise costs on families. In fact, some economists, many economists, project about $1,200 per year households will be paying extra. An increase of inflation by nearly 1%, economic growth.
Oh, he's on them valves.
And, for example, the increase of the average car price by $2,700. Is that a wise policy?
So I guess I ought to say this. You know, I think the standard case for
Mr. Anderson.
free trade and all that logically still makes sense.
Hello, Mr. Anderson.
It didn't work that well when we have one very large country that doesn't really play by the rules. And in any case, it's not the Fed's job to make or comment on tariff policy. We, you know, really, that's for elected people, and it's not for us to comment. Ours is to try to react to it in a thoughtful, sensible way and make monetary policy so that we can achieve our mandate.
Just this weekend, the president removed the board of the Kennedy Center and made himself chairman.
Huh?
What would you do if the president tried to remove a member of the Federal Reserve Board?
Talk?
Well, it's pretty clearly not allowed under the law.
Thank you. We've communicated back and forth about synthetic risk transfer as a potential danger to the banking system. And could you give us some insights on how we can improve financial stability by regulating these transactions more appropriately?
Cross this 200 and the
What
day
we've been doing
in
for some
reverse.
time now is
Wiggle around and we dump to
looking at them on a
96.2.
case-by-case basis, and if they really do transfer
Bitcoin wants to
risk
pump. You can see there's a big short there at
successfully,
97.8.
you know,
They
it's
enticed
a
more
good
of the
thing
shorts.
if a bank
It is a Tuesday. If we can
wants
catch
to
direction, we'll
transfer
continue
risk off
usually
its
in the
balance
direction
sheet
we're
in a
running.
way
That's
it
why I
gets
like to trade
compensated for
Tuesdays.
and all that. But what you want to make sure is that the risk is really transferred, and that was the problem during the global financial crisis,
Boggins.
with sort of things that appeared to but did not accomplish a transfer of risk. So we see this coming, and we've been looking at these transactions on an ongoing basis.
Well, I commend you for that. In fact, what happens typically is the transaction becomes complicated by synthetic risk transfers, as it was the case with synthetic
Diamond
derivatives.
comes in the bottom,
Thank
breaks
you
out,
for
gets
your
back inside. Yeah, you're right.
Talk
Diamond
about
rips
housing
back to the
impacts
upside,
critical
all the way to
element. A
97.7.
housing shortage.
You nailed it.
Housing is difficult. Two of the main
Yui Hong.
housing market.
You Hong
Fannie Mae
nailed the
and Freddie.
diamond, bro. You're spot on, my friend. You have lifer vision.
Does the
Welcome to
federal
the big
guarantee
leagues.
backing Fannie and Freddie help make mortgage rates more affordable and home ownership more accessible, Mr. Chairman?
I imagine it does hold down mortgage rates, the fact that they're a sovereign risk.
And
Dude, we
how
need
important
coffee
is
for
the
this one. We're gonna like
mortgage
fall
rate?
asleep here. So sorry, everyone. My usual high energy stream has just been taken by the vampire.
Yeah. And I have heard some discussions about
They suck the energy out of the room over here. Can you believe it?
would be detrimental, I presume, to the housing market.
That's really a question for
When that dude walks in a room, the light just like runs away. Light bulbs like run out of the room.
housing finance back in the private sector has some appeal over the longer run, but I leave that with you.
Thank you, Mr. Chairman, very much. Appreciate
Look at
it.
his eyes. Does he bling?
Thank you, Senator Ricketts.
That dude sleeps upside down, man. Straight up.
Well, thank you, Mr. Chairman and Ranking Member, for holding this important hearing, and thank you, Chairman Powell, for being here today to talk about our economy and all the things that are going on. I want to address, again, something that the Ranking Member started talking off about, which was characterizing the CFPB as being the cop on the beat here. But I can tell you, as having been a governor and having a Department of
I'll
Banking.
be honest, I saw a bunch of banks go do shady stuff underneath the CFPB. So I like the idea of it, but it doesn't seem like it's been doing too much. That's all I got to say.
Like JP Morgan.
Maybe I'm wrong.
We would investigate. as could the OCC, the FDIC, the FTC. So to characterize that nobody's out there looking for consumers, I think, is inaccurate. And we ought not to try and scare consumers right now that somehow this is the case, because if you do have an issue, if you're a consumer, please reach out to your State Department of Banking, because those folks are going to look out for you. I can tell you that because I used to have one of those Department of Bankings. They did a fantastic job of looking out for the consumers.
I don't even know what that is. Like the State
One of the things
Department
that has also impacted consumers is inflation. Prices under the Biden administration were up 20%. An average household is paying $13,000 more today than they were for the same standard of living they had before Joe Biden got elected.
What kind of watch he got?
We see that grocery prices, for example, are up 22%, rents up 23%. Simply put, Nebraskans are economically worse off today than they were 4 years ago, and I expect that that's part of the reason why we saw this change in the administration. They thought that that was not something that they wanted to continue to pursue. They didn't want the same policies being followed. We have to end the reckless federal spending, rein in inflation, and be responsible about how we make decisions to be able to grow the economy. One of those areas that I'm concerned about is the expansion of the Fed balance sheet. The Fed's balance sheet before the
QE and QT
pandemic was about $4.1 trillion. By May of 2020, the Fed expanded that to $7 trillion. And by
$7 trillion. They're buying securities, man.
$8.9 trillion.
It's kind of like a socialist government. It's
Inflation
weird.
peaked at 9.1% that year, a high we had not seen since 1981. Now, I'm encouraged by the actions the Fed has taken with quantitative tightening to shrink the balance sheet down to $6.85 trillion, but $6.85 trillion is still too high. And one of my concerns with this, Chairman, is that that's kind of one of your tools to be able to guard against a downturn in the economy or some sort of shock. You obviously used it during the pandemic. Looking ahead long term, will the Fed Reserve continue to this course of unwinding the balance sheet?
Yes, so what we said is that we intend to slow and then stop the decline when reserve balances are somewhat above the level that we judge consistent with quote so-called ample reserves. The most recent data and the feel of the markets is definitely that reserves are still abundant. They're about the level they were at when runoff started, because the runoff has really happened out of the overnight repo facility, reverse repo. So yes, it's an ongoing thing, and we're not yet where we're headed.
So what kind of pace can we expect? And I know that obviously there's going to be a lot of factors like what happens to the economy over the course of next year. But if things were going to go along the way they are today, you've already said the economy's doing well. Inflation's a little higher than we want it to be at 2.6%, but unemployment's at 4%. If these commissions, and I think you used the word stable quite a bit, if these conditions were to remain stable throughout the course of the year, would you have a range that you could give us of where the balance sheet might be if we were talking again here in January 2026?
We basically we're going to be looking at reserve conditions in reserve markets, and trying to stop a little bit above what we consider ample. And we think we're meaningfully above that now. We can't put a number on it because you can't directly know the demand for reserves other than by observing behavior in the market and then putting a little bit of a buffer on it. So I can't give you an exact number, but for now it's ongoing, and we have a ways to go. What
kind of conditions would have to happen for you to start going back to quantitative easing?
So go to quantitative easing. That's a tool we tend to use when we're at the effective lower bound and we can't cut interest rates anymore. So nothing like what you're seeing.
Look, just sideways on the 1 minute.
It's a different test for stopping.
I got you. You come here to see exactly what price is doing and why. Today, everyone's kind of on the words of Jerome. We're watching sideways. It all makes sense, right? Everything kind of falls in a line.
So that you think
this should mainly break down, but when you come in the diamond, you should break out the diamond. But if we forgot about the diamond, just look at it as symmetrical.
Can't give me a range on this. Is that what I hear you saying?
That's right. That's right.
Well, we got these big shorts.
Great. Well, I encourage you to keep doing that because, again, I think
would be the same similar target, 97.688, 97.8.
For the next
Sorry to talk.
Issue that we may face. So thank you very much, Mr. Chairman. Appreciate you being here.
He was just
Warner.
kissing butt, apparently.
Thank you, Mr. Chairman Powell, good to see you. One of the things we've talked about in the past, and I got 2 or 3 issues I'm going to get through fairly quickly, is that that while our regulatory framework should always promote financial innovation, that innovation can't come at the expense of things like anti-money laundering, consumer protection, financial stability. I continue to worry in many of these hearings where we keep seeing this regulatory creep outside the boundaries of traditional financial regulation. I think if we were starting a system from scratch, few of us would design it this way. But it is one of the reasons why I'm looking forward to working with Chair Scott and my colleague, Senator Lummis, on a framework at looking at stable coins in particular within the regulatory perimeter.
There you go, crypto.
My friend Bill Haggerty just introduced a bill in this area. I'm looking at trying to make sure we get those guardrails put in place.
Trying to make sure. Why don't you make sure?
How it touches the Fed is something that's terribly important to me. I know you and I have talked in the past about the notional idea.
Thank you.
Same activity, same regulation in the non-bank sector. If you'd like to wax.
Let's get the likes up to the watchers, please. Thank you. I appreciate it. All the likes I get, I'm greatly appreciative. Thank you so much, dear Lord, for all the likes being given. So grateful for that.
They are similar to other
Amen.
activities, should they not have the same regulatory structure?
It's a blessing.
So we definitely support these efforts to create a regulatory framework around stablecoins. Stablecoins may have a big future with consumers and businesses. We can't know that now, but it is important for the development of stablecoins in a safe and sound manner, and a manner that protects consumers and savers and all, that there be a regulatory framework. So we see these bills and we're in contact as we were in the last Congress, and trying to add our technical thoughts and how to do this. And we think it's a very constructive exercise.
Well, we do think, you have a lot of expertise in this session, and there are people people come with lots of opinions on everything in crypto, from over the top to the other end of the spectrum. And I'm gonna need to rely on your expertise as well as we try to work through some framework to start with this. I know there are a lot of earlier questions on CFPB. I think the record is pretty darn good. It's returned $20 billion to consumers. Matter of fact, the last time we had the previous chair here, Chair Rohit.
This guy will put you to sleep.
Talking about $55 million.
Imagine him talking to his wife when he gets home from work. Honey, I thought last night's meal just could have used a little more.
Hall last night.
Just a little more salt.
Lots of things happening in Virginia. Normally we would get maybe 3,000, 5,000, 6,000 folks on a teletown hall.
A little late.
Last night, I have not seen anything like that in my time up on here on the Hill.
If you missed the trading group, you're in control. Come back, baby. It's up to you. You have your reality in your hands.
Whether our information is safe, whether privacy is protected. I had one lady say, in light of what was happening at CFPB, and while there's not a direct connection, she's saying, is her deposits at her bank safe? We tried to give her a assurance, but I said, you know what, ma'am, I'm going to be talking to the chairman of the Federal Reserve tomorrow. And with this diminution or shuttering, at least at the time being, of the CFPB.
Well, that looks like it's going to drop.
Can I tell, I believe her name was Mary, can I tell Mary from Virginia that her bank account is safe?
I think bank accounts overall across the economy are safe.
I think.
We've still got deposit insurance at the FDIC, and the banking system is well capitalized and safe.
Well, again, I think the concern...
That'd be the last statement I'd ever want to make.
Diminution of consumer protections.
I mean, we all have to hope that.
Concerns about whether that dollar being safe.
That's why, me personally, you do whatever makes you happy. Get money into real estate. If I'm going to keep money in cash, I get into real estate. I don't want it in the bank too long.
Markets,
5, 6, 7, 8 months, get into real estate.
Additional bonding that we're going to have to do, particularly with so many of these unpaid tax cuts. Matter of fact, one of the things that was really striking to me was that yesterday the president mentioned how he was, quote, examining Treasury debt payments for possible fraud, and suggested that our debt might not be as high as possible. We all understand the full faith and credit of the United States is based upon a reputation. If this president were to suddenly say, I'm wiping off X amount of debt because I don't believe we owe it, what kind of effect would that have on both stability of the dollar and the overstability of our economy?
It will probably not surprise you that I will defer to you on that question.
Do
Bam.
you think it would be, from a Fed standpoint, the President of the United States starts to say we're not going to pay our Treasury debt? You're going to have no view at all?
I'm not going to comment on things that the president says.
Amen. He's out of that.
I would like to see us at some point get a stronger answer on that, because I think that in light of the president's willingness to shut down agencies willy-nilly, his ability to potentially curtail payment of debt, I think would have devastating consequences on our economy. Thank you, Mr. Chairman.
Senator Britt.
Thank you, Mr. Chairman. Obviously, there's been a lot of conversation both in and out of this hearing room today. Conversations about a co-president referencing Elon Musk, referencing the work that Doge is doing. I think it's important to remember that President Trump ran on this. I mean, he said we're going to look for wasteful spending across our government. We're $36 trillion in debt, y'all. That's not only fiscally irresponsible, it is actually morally irresponsible. And the difference in this administration and the last administration is that President Trump is actually the final arbiter. And it's interesting that none of you had anything to say over the last 4 years when it is clear that our commander-in-chief was not in command. And if we're going to use the term co-president, then let's go back and say co-president Jake Sullivan, co-president Ron Klain, co-president Jill Biden. I mean, it seems that some of the biggest decisions were made during the president's aftermath.
She just slammed on that.
To be a little bit more honest about what's going on, what's actually occurring.
Wow.
Chair Powell, I want to discuss some monetary policy issues, but I first want to highlight
She came in hot.
supervisory items. We unfortunately started 2023 with several bank failures in which the Fed itself
Someone gotta
admits
say it.
its supervisors
Sometimes it takes a
were,
woman.
too slow to ask. The question has been asked earlier about who was fired, who was not. I think that there's some real merit to having accountability that we have not seen there. In the aftermath of those failures, the Fed was certainly not slow to act when it came to new regulations, like the new capital requirements that would have put the U.S. banks at a global disadvantage and actually hurt consumers in my state. The way I look at this is the world came up with a gold standard. And then Vice Chair Barr said, hold my beer. And unfortunately, that hurts Alabamians. In addition to that,
That's how you say it, Alabamian.
Community Reinvestment Act.
I'm an Alabamian.
Stress testing frameworks
Always
that were
wondered about that.
basically adopted in secret.
My
or
life
as
is
we
complete.
discussed last week,
I now know.
the reputational risk and just the arbitrary nature of that and those standards that were used to push political agendas. None of this is acceptable, and we've got to take a look at how to promote greater accountability and transparency into the Fed's supervisory function. Shifting gears, as of January 30th, the Federal Reserve had a mark-to-market loss on its balance sheet of roughly $221 billion. In fact, I looked back and the Fed has posted losses since September of 2022. Meanwhile, we've seen transfers to the CFPB totaling $2 billion since September of 2022. So just to clarify, Chair Powell, these money transfers are requested by the CFPB director each quarter and then directly deposited by the Fed. Is that how that works?
Wow.
So the
Fed's giving money to the CFPB?
money, and we we send that money. Yes.
Oh my
So,
God.
yeah, in fact, but Dodd-Frank
she's just
actually
telling us
prohibits the Fed from actually reviewing or amending those requests.
That is correct.
And so it gives full discretion to the CFPB
Up to,
director.
I think, 12% of our.
So here's the deal. They repealed Dodd-Frank because the CFPB can just get all the money he wants
So
from the
just
reserve,
to
which
level
creates
set, how many
unfiscal.
times, has the CFPB funding
She just
request
laid it
been
down.
denied by the Fed?
We don't have the authority.
You got to ask Elizabeth Warren this question now.
Yeah,
She cares
that's
so
what I
much
thought.
about
And
us.
By the way, I'd like to applaud the current administration.
this is crazy right
acting
here.
Director vote for inserting some accountability back into the agency by pausing these quarterly just blank checks. On that, I know there's been a lot of conversation around the Bureau over the last few days, but I do want to focus on those last couple of years, particularly the
You see
$2
Bitcoin
billion
pumping on this?
the CFPB received from September 2022.
She's cooking this dude,
up to
and
the last
Bitcoin's
receipt
cooking.
on January 2nd, 2025. Congress specified in statute that the Fed shall fund the CFPB through the combined earnings of the Federal Reserve System. However, as I mentioned, the Fed has
Is
no
221 down billion.
It has a balance sheet of negative 200 billion. So instead of the recent
So where are these $2 billion coming from?
CFPB through
It's inflation. It's taking our money. I've been telling you guys this for years.
Chair, there are only two statutes that authorize the Fed to make reserve bank assessments, and neither permit the CFPB
She's cooking right now.
fund transfers. So what authority exactly did the Federal
Someone
Reserve
said I'm in
have
love.
to assess the reserve banks in this manner over the last 2 years? I just wanted kind of a fact finding.
We looked at that question very carefully, and it's very clear on the law and the legislative history that we're still required to make those payments to do so.
Appreciate it. Thank you.
Isn't that crazy?
Senator Van
He's
Hollen.
required to pay. So you hear what he just said. You know, we're going to get to this live. He's required to send $2 billion to the CFPB. All right. Okay. Even though he doesn't have it, he has a negative balance sheet. Every time he sends that money, every quarter, $8 billion a year, they're putting us further into debt because there's no money there. That's inflation. You see? It's insane. Anyway.
And that's what Elon Musk is doing now. He's implementing Project 2025, the same Project 2025 that candidate Trump said he knew nothing about. And he said that because he knew it was unpopular. He knew it would be unpopular to take the financial cop off the beat. And I want to start by talking about what's happening over at CFPB, the Consumer Financial Protection Bureau, because that is the cop on the beat to go after fraudsters and scammers who cheat Americans out of their hard-earned money. And they have returned billions of dollars to our constituents, to the consumers who have been victims of these scams. And in doing so, they've earned some powerful enemies who want to shut them down. And Elon Musk is doing that dirty work on behalf of those fraudsters. And there's something especially twisted about the richest man in the world shutting down an agency that helps victims of scammers and fraudsters recover just a little bit of their hard-earned
Look at this shoulder, head, right
and
shoulder.
I find it especially interesting that the new self-declared head of the CFPB, Russell Vogt, told employees not to come into the office and essentially to stop work. Here's what he wrote, and I'm quoting, "Employees should not come into the office," unquote, and stand down from performing any work task, unquote. So this is an interesting situation. Federal employees continue to get paid, but the Trump administration tells them to stop doing their work. That apparently is what the Trump administration thinks is a good deal for the American taxpayer, to pay employees to do their job. So, Mr. Chairman, I have a simple question for you. Is that a practice that you pursue at the Fed, to pay your employees but tell them not to come to work? Have you done that?
No.
That wouldn't be very efficient, would it?
No.
No, it wouldn't. And yet, that's what the so-called Doge boys, efficiency boys, are doing. In addition to that, they're rummaging through the private, very personal, sensitive information of Americans at the Department of Treasury.
Come on.
So it seems to me that the Trump administration and Elon Musk,
Eric Snowden already told us they went through our lives, man. Like, let's get real.
except what
Let's get real.
Donald Trump said he was going to
Let's
focus
get
on
real.
during the campaign, which was to bring prices down. And when you look at the price of eggs these days, I noticed that Waffle House just instituted a new 50-cent per egg surcharge due to the nationwide rise in the cost of eggs. They said that's going to be a new surcharge, and other restaurants are following suit. You've seen that, right, Mr. Chairman?
Yes.
Yeah. And at the same time, the Trump administration has restricted federal agencies from providing the public with information about the bird flu, avian flu, which is part of the cost of egg increases. So what we're really facing here is an administration that campaigned on bringing down prices and is not doing that. Did not campaign.
It's been a day and a half, my guy.
That's what they're doing.
Like,
when it comes to prices, Mr. Chairman, the president's also talking about significant increases in tariffs. Our Republican colleagues are also talking about passing a tax bill that gives way disproportionately to the super wealthy and which will add trillions to the deficit by their own account.
why isn't chicken going up just the eggs? It's kind of funny.
They're talking about playing around with the baseline. So my question to you is simple. All things being equal, do big increases in tariffs and increasing the
Remember Egg Day? Remember my Egg Day?
put upward pressure on inflation? Isn't that simple math?
Exactly.
You know, it really does remain to be seen what tariff policies will be implemented, and I just think
Look how crazy this has been, right? Imagine trading
really
this.
Don't know. I mean,
It'd drive you nuts.
We see.
You're happy to be here to see what's going on and to relax, watch this with me, and see how the market evolves throughout the day. Don't force trades.
The Fed took actions because they were concerned about the impact of increasing tariffs. Isn't that the case?
We wound up cutting rates in 2000 and I guess it was 19, but it really was because growth slowed and confidence was weak and the global economy was weakening. So the net effect of all that's what we look at. It's really not just tariffs.
The Gulf of Egg.
Tariffs, immigration, fiscal policy, and regulatory policy. And those will all go into a mix, and we'll.
This guy said, "Patrick, man, chill."
If you could just get back to me on the question of increasing the deficit by trillions of dollars.
Is he going to cry or is he going to look
like?
like?
You believe that has on inflation prices? Thank you, Mr. Chairman.
Sir. Senator Lummis.
Thank you, Mr. Chairman. And
Yeah.
Chairman Powell.
It's our girl, baby.
My questions will take. They will be focused on the bank supervision function of the Fed. And I'd point out that when you and I were toddlers, 1956, the chairman of the Fed at the time, William McChesney Martin, said that the Federal Reserve Board is an agency of the Congress. Ben Bernanke said something similar in 2013 when he told Janet Yellen that, quote, Congress is our boss. Do you agree with that statement?
Yes, the way I always say it is that our supervision, our accountability runs through the legislative branch, not through the executive branch, as it does in many other forms of government.
Thank
Got a
you
lot of
for
shorts
that,
building
because
above us for a nice squeeze here.
Guessed that
Looking like we may
that
get
was
an
going to
eruption to
be
the
your
upside.
response.
Just be careful if you're
The way
shorting.
that the Fed has behaved.
Seeing a lot
for
of
the last
stops up
4
here.
years in
About to
its
get liquidated,
relationship
possibly.
with the U.S. Congress.
Just warning you, do whatever you want. I'm not a financial advisor.
Its nose at Congress.
Shut up now.
Your staff has repeatedly stymied information requests from this committee, notably made by myself, the chairman, the ranking member, Senator Tillis, former Senator Pat Toomey, and others. In my experience, the Fed is a black hole. It consumes information, but it never releases it. Your fellow governors have personally misled me on at least 2 occasions with respect to Wyoming and digital assets. And in recent federal court filings, former Senator Pat Toomey has accused your staff of lying to him while providing technical assistance on legislation that passed in the National Defense Authorization Act in 2022. Now, I have behind me a statement by the Fed's General Counsel, one of the staff that's sitting behind you today, who said, quote, the Fed generally resists legislative prescriptions. Now, to me, that's thumbing his nose at Congress, the very people that you and I just agreed you are responsible to and the people depend on. So this is why the American people think there's a deep state. This is why they think there are faceless bureaucrats making policy to hurt the very people of this country. Just look at the mess the Fed made of Silicon Valley Bank. And I contend that there is a lack of understanding that is deliberate on the part of the Fed with respect to digital asset policy. So the Constitution says Congress is your boss, but somehow your staff have not gotten that message. So, Chairman Powell, do you commit on behalf of yourself and the Federal Reserve staff to comply fully with all document demands issued?
I don't know how you're going to get around that one.
In a timely manner.
He's going to say, I do the best we can. We always help, but,
Sure.
you know.
Will you instruct your staff to be complete in their responses and not to obstruct the oversight functions of this committee?
Wow.
You know, we always work with the committee to be responsive to your requests. Sometimes they're beyond our capacity to respond to, and we work with committee and with committee staff to do that. But we're always responsive to committee requests.
And I'll look forward to engaging with you when you feel that our requests are outside of the scope of
We
the
can discuss
oversight
that together.
we have over the
We
Fed.
can go over
Do
that.
you commit to disciplining or removing any staff that are found to have engaged in
No.
debanking activity, furthering Operation Choke Point 2.0, or other misconduct?
I can't make an open-ended commitment to remove anybody, but I will tell you that I am struck, and my colleagues and I are struck by the growing number of cases of what appears to be debanking, and we're determined to.
The fact that he mentioned it is amazing.
In
It's
fact,
like,
I took the thing that you showed during the debanking hearing. When I saw that, we're now taking that out of the manual. So I thank you for that.
Thank you, Mr. Chairman. My time's up.
that was in there. It was written in there. Can you believe that?
Thank you, Mr. Chair.
He had to take
Ranking
something
Member,
out.
and,
That's how
thank you, Chair Powell, for being with us
degenerative
today. I
the wording
appreciate
was.
your presence here. I'd like to start with the issue of the rising cost of home ownership, something that I know is of great interest to many of my colleagues on this committee. I know, Mr. Chair, that you care a lot about home ownership and making home ownership accessible and available to folks. My colleague, Senator Lummis, as well, many of the folks on my side of the aisle as well. And so I think this is something that we can agree on, that the rising cost of home ownership is a big challenge for our constituents, for Americans. And one of the big pressures, there are many, but one of the big pressures is the rising cost of home insurance. In Minnesota, families, seniors are struggling to manage a nearly 40% increase in home insurance rates. We've seen this over the last 7 years or so. And I know, Chair Powell, that you've told this committee in the past that rising cost of buying insurance for your home has been a source of inflation as we've been trying to manage inflation. Now, I don't know anyone who doesn't see this crisis of rising insurance rates as being caused by extreme weather events. We've seen massive flooding in the southeastern United States. We've seen flooding in Minnesota. We've seen fires in the Mountain West in California. I mean, these are climate-related events. That's not a political position. That is just a fact. So, we've got banks that of course, require, understandably, that a homeowner provide insurance as a predicate for getting a mortgage. So there's a big question about what's going to happen when insurance becomes unaffordable, or in some parts of the country, just literally not available, and what impact
There she
that
goes.
would have on the mortgage market.
dump comes down,
on the
see?
value of American homes.
Shoulder, head, right
Just last
shoulder.
week, a new analysis from First Street showed that overall, the value of U.S. real estate could be reduced by $1.4 trillion, colleagues, over the next 30 years due to unaccounted for climate risk. That's the cost, the risk.
Rejection
Not
by
being
that
able to
200,
afford
you got to
home
flip
insurance
that.
because of these extreme weather events. And the prospect of trillions of dollars of property become uninsurable is clearly a recipe, it seems to me, for market instability, both in the rental as well as the mortgage market. So my question, Chair
And there it hits the
Powell, is,
target.
given these trends, how do you think the Fed and how do you think we
96.5.
should be thinking about the challenges that
Crazy.
these events are going to pose to insurance markets and to the overall financial stability of the economy? I'm asking you to comment specifically on climate change because I understand my colleagues on the other side of the aisle see that as a political question. It's more like what you see as the risk to financial stability here.
So let me quickly note that we don't regulate or supervise insurance companies for the most part, but we're seeing the same thing, which is both banks and insurance companies are pulling out of areas, coastal areas and things like that, or areas where there are a lot of fires. So what that is going to mean is that, you know, if you fast forward 10 or 15 years, there are going to be regions of the country where you can't get a mortgage, there won't be ATMs, there won't, you know, the banks won't have branches and things like that. Right. That's a possibility coming up down the road. It's not that the banks will stay there.
Got Starlink and crypto. We don't need it.
In the face of evidence of
massive dump. Look at the liquidation now, headed down to 96.2, and just a massive dump there down the channel.
I think the risk is that they just won't be
You
there.
can see the Head and Shoulder told you we were going to take a bit of a dump there, and finally we did. So you track it on the 1 minute, you'd be pretty spot on with price action throughout the day here.
Instability in our economy overall.
And then we just hit target 1,
You would
96.5.
see that kind of dramatic
And I expect it to go to 96.2.
ownership, home values, not to mention the disruption that would occur if people literally couldn't be in their homes anymore.
So I think it's going to fall. If that happens, it'll fall on homeowners and
Right.
See if we can get a bounce on
also fall
96.5
state and
here.
local governments. You know, which you see happening now, where they're stepping in states where insurance is going away. Private insurance, you're seeing states step in because they want those areas to remain prosperous. So I don't know that it's a financial stability issue, but it certainly will have significant economic consequences.
Well, certainly to try.
I saw it as symmetricals. They usually break down.
Reinsurance is
And it
an
did exactly
example,
what it's
and that's
supposed to do. It broke down.
Places where
Hit the first target.
commercial insurance isn't available.
We did have this drawn before it happened, and we tracked it for you
chain of thinking, and I know in this
today.
committee,
Getting a
I've
bit of a
heard some
bounce there on 96.5. I wouldn't be surprised just playing with people. I would not trade this
overall with flood
while Jerome Powell is
insurance, just as an
talking,
example,
and I would wait a couple hours for this to
expense that
settle.
would have for us as well. I raise this, colleagues, because I think that this is an important issue that we need to be paying attention to. I do think it has a fundamental impact.
777s of the lights. Thank you so much. You people are blessed. Sorry, I don't have my regular talking the whole time. I can't wait to get back to that tomorrow.
Thank you, Chair Powell. I have a question. You and I have talked.
Good, nice rest for my voice. I give you that,
about my
though.
deep and keen interest in the Community Reinvestment Act, and I'll follow up with a question on that for the record.
Thank you, Senator Smith. Senator Haggerty.
Thank you, Chairman Scott. Chairman Powell, it's good to see you here today. Welcome. I want to start by talking to you a bit about markets and inflation. Less than 6 months ago, you expressed some serious concerns about labor market weakness and the risk of persistent inflation. But since then, the FOMC has begun its easing cycle and cut its target rate by 100 basis.
He put his part like in the middle of his head. You kind of want your part over here.
Now in the January meeting, the FOMC
It's a bit odd, you know what I mean? But maybe there's some reason for that.
labor
I don't know.
market
God bless
and
him.
inflation have reached a point where you're comfortable maintaining its target range. And my question is this: the recent market data, including last week's strong jobs report,
maybe I'm wrong,
indicate that the economy is on firm ground. Indeed,
keep my mouth shut.
Swaps markets have begun to price in fewer and fewer cuts this year. And I just wanted to talk broadly about these market conditions that you see. Do you see evidence of a higher neutral rate emerging at this point?
Yes, I mean, let me say there was a lot of reason to be concerned about downside risk in the labor market toward the middle of this year, but really that concern has diminished significantly. Labor market's very strong. I think the evidence is, my own view, and there are many different views on this, but is that the neutral rate will have risen meaningfully. Very hard to be precise about it from what it was. It was clearly very, very low before the pandemic. Extraordinarily low, historically so, but yes, I think it's moved up, and many of my colleagues on the FOMC feel that way too.
It certainly seems that way. I'd like to turn now to what seems to be a very popular topic right at this point, and that's the CFPB. In your response to Senator Britt's question earlier, you confirmed that when the CFPB submits quarterly funding requests, the Fed is not in a position to exercise any discretion over what the funds are used for. Is that correct?
As long as it's compliant with the law.
$2 billion every quarter, guaranteed.
It just strikes me that the Fed is not in a position to hold the CFPB accountable for what it does or how it spends its money. Congress hasn't been allowed to hold the CFPB accountable for what it does or how it spends its money.
See how they circumvent Congress?
It looks like no one has been able to hold the CFPB accountable at all.
That's why they got rid of it. You see, it was able to just take Fed money without anyone doing anything about it and spend the money. You get it? So while Elizabeth Warren sits there and it says it's not helping the consumer, it was hurting us worse because they were consistently sending, you see what's happening? They were taking money from the Federal Reserve, a mandated $2 billion a quarter, for something we don't even know what the heck they were doing it with. We don't even know. And there was nobody that could oversee it, and no one could say it couldn't stop because it has to go.
Intentionally created.
Pretty odd.
Wholly unresponsive to it.
It sounds like a pretty good idea to to stop it right now.
I'd like to
and end the floodgates here and see where the money's going. I mean, it's pretty interesting.
And particularly,
looks like we're dropping down further down to 96,236 here. Is your next target for Bitcoin?
It's one thing for the Fed to disassociate from its past climate activism in a press release, but to credibly claim that it's divorced itself from partisan climate policies, the Fed needs to do more than just issue statements. It needs to actually end its climate policies. The Fed's independence from politics is a headline topic at the moment, of course, and while much attention has been given to potential external pressures on the Fed, I think it's also critical that we scrutinize how the Fed's own regulation and supervision might be utilized to in some way politicize the institution. So when the central bank strays from its mandate by embracing partisan climate policies, the Fed embroils itself in controversial political debates and invites legitimate political scrutiny. So I just want to urge the Fed to refocus entirely on its core statutory mandates. I know it's a commitment that both you and I share, Mr. Chairman. Thank you for being here with us today.
Thank you.
Thank you.
Thank you.
Senator Warnock. Thank you very much, Chairman Scott, and welcome again, Chairman Powell. I want to echo the words of Ranking Member Warren and so many of my colleagues today on Doge and Project 2025's illegal attack on the Consumer Financial Protection Bureau.
They just told you that they're sending tons of money without getting regulated, man. Like, come on now. Like, you can't just read the same statement you had prepared after the girl just broke it down for you. Are you really going to do that? Or do you want to just lose everyone that's going to vote for you? Come on, man. Like, you got to change your thought process here now. Anyway, let's let them talk.
And since its inception, the CFPB has been the only federal agency solely dedicated to protecting American.
And it hasn't, because it keeps giving money to the Federal Reserve behind our backs, dude. It's not doing anything for us, man. Let's get real, bro.
Reduce costs for Americans, returning more than $21 billion to Americans who've been cheated since its inception. I want us to focus on that as
talking
about chasing after waste and fraud and abuse. The CFPB has returned more than $21 billion to Americans.
Was that before or after the bank collapsing of Silvergate? Yeah.
Will increase costs for Americans, and it will give the green light to fraudsters and predatory actors seeking to cheat.
It already has.
Hardworking Americans. And so Chairman Powell,
should have saved $40 billion then.
Political stripes have written in my office.
I'll be positive.
And they are alarmed by an unelected billionaire and his hacksters' dangerous attempts to access Americans' private data and the Treasury Department's systems that control $6 trillion in annual payments to millions of American citizens, including Social Security, Medicare, and tax refunds. Quickly, yes or no, has Elon Musk or members of his team,
he's not going to answer that,
to your knowledge, attempted to access the Fed's protected data and systems? Yes or no?
I don't believe so. I don't believe so.
Okay, so will you commit to report to this committee,
try not to laugh,
majority and minority, immediately should you become aware of any such attempt by Elon Musk or Doge to pierce the Fed's independence or to access its protected systems?
Yes.
Thank you for that commitment. The Fed's latest monetary policy report states that the tight labor market has allowed employment and earnings gaps between Black
and Hispanic Americans and white Americans to narrow. I was glad to see that many of the long-standing disparities in employment and wages by sex, race, ethnicity, and education have narrowed. Under the Biden administration, some gaps have reached historic lows. Specifically, the employment gap for Black workers and white workers is near its lowest point in almost 50 years. That is the economy that the Trump administration is inheriting.
But didn't Trump give more to...
in almost 50 years. Chair Powell,
Anyway,
as you
we'll
work to promote maximum employment, what steps will the Fed take to ensure that these equity gains are permanent?
So the best thing we can do is to, it's both of our
He means the people who are controlling.
As you well know, high inflation hits people
The guy with the B.
income spectrum first and most.
Not the guy with the B.
And in addition to that, we know that the benefits of a strong labor market over time can be really visible and important in those communities as well. So we pursue our
If you're just joining, we found a symmetrical, which mainly break down shoulder, head, right shoulder, took the dump. And now we're looking for a bear flag that could continue to 95.9.
You pursue your mandate, you want to make sure that it's working. Would you agree that we still need good equity data to continue to narrow and close those gaps by race and gender?
I do think, we're always going to be in favor of good data at the Fed, and we do have quite a bit of that data on our website.
But if we don't have equity data, it'd be difficult to know, right?
Yes.
I'm glad to hear you still believe in the value of good equity data for economic policy making. It's better to fly with the data than to fly blind. I'm not sure what's so controversial about the data. And while I was disappointed to hear that the Federal Reserve, which is independent from the White House, it scrubbed a diversity and inclusion section from its website after President Trump's executive order, while also scrubbing data on the racial, ethnic, and gender makeup of its economists and researchers, I hope you will continue to ensure that the public has good data on how our economy is working or not working for historically marginalized Americans. I also hope you will reconsider your decisions around the whitewashing of the Fed's website. Chair Powell, as we think about the value of protecting data on the Black-white wealth gap or employment gap, I think it's important to understand what policymakers can learn from this data. Historically, from what you've seen in the data, historically, what types of economic events have caused the Black-white wealth gap or employment gap to widen?
Well, high inflation, downturns. You see generally, just take the Black unemployment rate, it generally moves at twice the speed of the white unemployment rate. So when it goes up faster, and when it comes down faster. But there is, at the end of the day, there's always been a gap, and we want to run a strong labor market, and we target overall labor market conditions for maximum employment. But one of the benefits of that is that gap comes down.
Thank you so much. We all know that fully deregulating our financial regulators like the CFPB, firing bank examiners at the FDIC, or weakening the Fed's supervisory capacity makes an economic shock or recession more likely. We know that this disproportionately impacts Black and Hispanic workers, and there are real consequences to weakening and eliminating financial regulations that keep us safe. Working people are the ones especially who suffer. So thank you so much, and I look forward to continuing to work with you to close these gaps. Senator Banks is next.
Thank you, Mr. Chairman. Chair Powell, thank you for presenting your report to the committee today and for coming to meet with me last week in my office as well. The Federal Reserve has enormous power over Americans' ability to work and earn a living. And the Fed's interest rate decisions have an especially big impact on industries like manufacturing, which depend on big investments. Chair Powell, the Fed's data on manufacturing is still holding up nationally, but it doesn't look very good in the Chicago region, which includes most of my state in Indiana. The Beige Book says manufacturing jobs are declining and fewer people are buying manufactured products. It also says that steel demand is at a low level, auto production has slowed, and machinery orders are down. What does that say about the rest of the country? When manufacturing in the heartland slows, does that signal trouble for industries in other parts of the country?
It can. It doesn't always, but it certainly can. We watch the manufacturing sector. It's very important. Manufacturing jobs tend to be high productivity jobs. They're very important in our economy. But I would say over the last couple of years, manufacturing was pretty weak during years in which we had high GDP overall. Manufacturing is a smaller proportion of the economy than it used to be, but it's still extremely important.
Senator Reid asked you why free trade doesn't work when one of the giant players doesn't abide by the rules. The China shock is proof of that. The Fed has a mandate to maximize employment. How do you account for the whole industry that is repeatedly suffocated by unfair competition?
We don't do trade policy. We're not responsible for it. We don't comment on those who do trade policy. So we don't really have a role in focusing specifically on that. That really is left to those who have responsibility over trade.
Do you agree that a healthy manufacturing economy is important to a healthy overall U.S. economy, though?
I do.
I hope you had an opportunity to read Robert Lighthizer February 6th essay in the New York Times. He explains why a big trade imbalance between any two countries is harmful to citizens in both of those countries. How does the Fed take the trade deficit into account in your decision-making at all?
Again, we really don't. We're aware of it, but it's not something that directly affects our mandate goals.
So not at all?
No. I did read his book, by the way. I didn't read that editorial.
Fair enough. It is a good book as well.
Wow.
I want to get into tariffs.
Oh, is this a book club or is this like, you know what I mean? What are we doing over here?
But I want to note that Indiana gained manufacturing jobs during President Trump's first term with the 2018-2019 tariffs. Even though the economist's conventional wisdom is that tariffs will reduce jobs, do you commit to following the data and not prejudge any outcome?
Very much so, as we did in 2018-19.
Finally, my staff reviewed the research paper on tariffs in preparation for this hearing, and I want to point out one of them called The Employment Consequences of U.S. Trade Wars. Mr. Chairman, I'd like to enter this paper for the record. It found that the timing of tariffs are very important. It found that China's retaliation to President Trump's tariffs did hurt U.S. jobs, but if the U.S. had imposed tariffs on China much earlier in the 90s and early 2000s, it would have almost completely eliminated job losses due to the China shock.
Totally.
I know you've said what you said before, but will you and your staff please take a look at this paper?
We certainly will. I imagine we already have, but I'd love to see it.
I appreciate that. Home ownership is an essential part of the American dream, but families are struggling to afford homes. In just 5 years, the price of a typical home in Indiana has gone up more than 60%. More than 3/4 of American families can't afford an average home in their neighborhood. How do the Fed decisions about monetary policy affect the ability of regular families to buy a home?
Most of what will have driven that increase will be about some of it's about local regulation, as you I'm sure know. It's also about just wages going up and costs of materials and things like that going up. And land costs and all that are going up a lot. The channel that through which we affect housing is, of course, interest rates. And right now, interest rates are still pretty high, but actually, mortgage rates are really not set at the Fed. Those are really key off of longer run things. Nonetheless, we're clearly having an effect on the housing market, and that'll unwind as we normalize policy. But we're still going to be faced with high insurance costs and high material costs and labor shortages and all the things that keep driving housing prices up across the country.
Thank you. My time has expired.
Next will be Senator Gallego.
Thank you, Mr. Chair. Mr. Powell, just kind of running along that vein of thought, the housing costs are one of the top concerns of my constituents in Arizona. From 2010 to 2022, rents in Arizona increased by 72%, and I wish wages were as increased to match, but they did not. And the average 30-year fixed mortgage rate has been above 6% for nearly 30 months. With very few rate cuts anticipated in the near future, potential cost increase from tariffs or imported construction materials, as well as the demand that we're going to see in terms of rebuilding from California and labor shortages, what do you think needs to happen to make housing more affordable in Arizona and the United States in general.
You know, housing policy and things to help housing supply are really in your wheelhouse, not ours. I do think you know, the housing markets around the country are still suffering from the after effects of the pandemic. Once that's all the way through and short-term rates are down to normal, whatever the new normal level is, I think housing costs are still going to be high. I think it's still going to be expensive to build housing in many parts of the country where lots of the urban areas, the obvious places to build housing has happened. So I think it's a long-term. There's a short-term problem which will go away in coming years, but there's a longer-term problem with housing availability, and that's going to be something that's not within our authorities or power to affect.
You know, one of the things that I've seen in Arizona is because we have people that are locked into mortgages at 2.9, 2.8%. And in order for them to move to the new house, they're going to have to essentially go and try to get, quote unquote, a bigger house. The mortgage payment is going to be through the roof.
Trying to start a divergence here finally.
The Fed doesn't set the mortgage rate. At the same time, one of the biggest drivers, obviously, of inflation, especially in places
but
like
it's still
Arizona,
slippy.
is
You see
housing
this?
costs. And then one of the biggest decisions essentially you make on whether or not to move rates is inflation, which is driven by housing costs. So we're in this kind of perpetual vicious circle.
Just slow bleeded us today on a Tuesday.
Interest rates. So
luckily, I got out last night with the
I
bigger
don't know what the answer to that is, but I just want to
trade
at least
covered.
for there to be some understanding on that, because it's the reason we're not breaking out of this cycle is because the problem kind of feeds itself over and over and over again.
Yes, that's exactly what's going on, but it's not obvious though that lower rates would lead to lower housing inflation, because of course that would increase housing demand. It would unlock people's low mortgages, but that creates both a buyer and a seller. So it's not clear that would be something that would drive down housing inflation.
Well, my supposition, especially in places like Arizona, which is really growing fast, is that by increasing supply with lower rates, you end up essentially having more of a competitive market, so people will start moving and essentially bring down the overall cost. But moving on, so I've also heard from businesses in Arizona, they're concerned about the threat of economic stability in tariffs that are imposed on our key U.S. trade partners. How should we expect prices to move for basic items like tomatoes, peppers, cars, and the like if we place a 25% tariff on next month, as the president has threatened?
We don't.
So as you know, we don't do tariff policy, and we don't do commentary on tariff policy.
We've talked about this already, man.
Just generally, when somebody's got to pay the tariff, and it can be the exporter, it can be the importer, it can be a middleman, and
somebody
can be the
pays
consumer.
for it, though.
Somebody does, but in some cases it doesn't reach the consumer much. In some cases it does, and it really does depend on facts that we haven't seen yet.
But that also contributes to some of the calculations on.
That's something he did just say, because they're saying it always has to be one way or the other.
It's hard to predict.
There's a question of how persistent that would be and how large it would be.
Mm-hmm. So, and of course, I understand you're not here to specifically comment on trade policy, but overall, is it your opinion, let's just say a base opinion, that high tariffs can lead to higher costs, which would then end up being seen in terms of your inflation calculation that helps you set the rates?
I'd say that's a possible outcome, which will depend very much on specific facts about what's being tariffed for how long, et cetera.
Okay. Thank you. I yield back.
Senator McCormick.
Thank you, Chairman Scott, and Chairman Powell, good to see you again. In the past 5 years alone, the national debt has exploded. Federal spending and the debt have increased by more than 50%. Debt held by the public, or true debt obligation, has more than tripled during the past 15 years, reaching more than $28 trillion. All told, U.S. national debt is now over 120% of our GDP. And runaway spending contributed to a regressive tax on all Americans, a tax known as inflation. In the past 5 years, the cost of living has skyrocketed for working class Pennsylvanians, especially, as you and I discussed when we visited, those relying on fixed incomes. And unfortunately, that compounded effect of inflation has not been offset by commensurate rise in wages for many Pennsylvanians. I've heard from countless Pennsylvanians who had to count their dollars at the gas pump, cancel family trips, even tighten their belts at the dinner table because of inflation. So while we discuss these heady issues, let's not lose sight of the very real human cost of the decisions made.
Still inside this flag, looking for a bullish div bounce off the 1 minute time frame.
About the national debt.
You can see the RSI attempting to make a pull up here as the RSI is up while price action's down, but
so how
it looks pretty nasty to me.
About the accelerating pace of government borrowing and the borrowing cost, which will affect families in the form of higher mortgage rates.
Yeah, you know, we don't comment on fiscal policy other than to say that as
more money in circulation creates inflation.
The U.S.
It's taxation without representation.
Is on an unsustainable
Can't see it, but it's happening.
The level of spending or the
looks like this is going to tank right here.
Is unsustainable.
There's like a shoulder, head, right shoulder there. You can see it.
Ultimately, the level of the debt
shoulder, head, right shoulder.
It's there's no time like the present to start working on this. The longer we wait, the more painful it will be. It's something we need to do and we'll have to
head,
do.
right shoulder. Looks like you're going to take it down again here.
And
but
just
you
as
never
a
know.
practical matter, how do you factor that into your policy?
I'm not trading this right now.
We don't. You know,
Too sketchy.
We're here to achieve maximum employment and price stability.
But look, now they got 96K.
It's really up to Congress to deal with fiscal issues, and we leave that to you.
Well, just as a more practical question, I think which falls clearly in your bailiwick. Because of that national debt, it's caused the supply of U.S. Treasuries needed to finance the debt to skyrocket. And that's at the same time the Fed is shrinking its holdings of Treasury through quantitative tightening.
You get it.
So the
doesn't make sense. This guy's on point.
Or could you at least
when you do the math, nothing equal. It doesn't add up.
This is having on the Treasury market as investors must absorb that supply. And in particular, I'm interested in how the biggest holders of U.S. Treasuries, how their behavior is changing as debt increases.
So this is a real Treasury question, but I think from our standpoint, I can say that there are lots of buyers for Treasuries, but Treasury buyers are going to be factoring in their assessments of the supply that's coming, and that may be part of the reason why the term premium has increased, as you know, over the course of this year. Although the rates have been going up and down lately, they're almost back to where they were before the election.
I know the Fed has been moving forward with comprehensive changes to the stress test process. Could you discuss how you're thinking about reducing the volatility of the results and increasing transparency on the stress test?
So on transparency, we're going to release the models, clean them up and publish the models, put them out for comment. In terms of volatility, we're also going to release the stress test scenarios before we implement them. In terms of volatility, what we said we would do is average the changes to, the problem is the stress capital buffer can be moving up and down just because of volatility in the results. And it seemed like a good idea to smooth that out by averaging over a couple of years. We're putting all this out for comment though, and ultimately we'll reflect those comments in the final decisions we make.
Thank you. I'll yield back my time.
Thank you, Senator McCormick. Senator Blunt Rochester.
Thank you, Chair and Ranking Member, and thank you, Chairman Powell. It's good to see you, and thank you for meeting with me last week. We discussed everything from jobs and housing supply to the real impact on Fed policies on all of our lives. And I also got a chance to share with you just the concerns and consternation of Delawareans who, for the past few weeks, have been frightened by firings and funding freezes, and just the real impact on people's financial and personal data and information when, DOGE has access to this information. I'm hearing from my constituents as well about the potential shuttering of the Consumer Financial Protection Bureau. As Senator Warnock mentioned, CFPB has returned over $21 billion to millions of consumers, and that's a real impact. But I want to also highlight that it was your leadership in the Fed working with Congress and the Biden administration to really help answer that question that you were asked about if you had the choice to switch countries with France and Germany and others, that you said no, you'd rather be here. And that success is a testament to all of us. We came together during a really tough economic time at the end of this, during a pandemic, and it limited the recession and job losses. And since COVID, we've seen a robust job growth.
Yeah, that's a dump. See the head and shoulder pattern I showed you there? It was tiny, but my mind could see it.
And I've worked to address
Shoulder,
one part of this
head,
phenomenon,
right
our
shoulder.
supply
Let me
chain
show you again.
disruptions. In fact, I recently joined Senators Cantwell and Blackburn
That
to
took us down.
reintroduce the bipartisan Promoting Resilient Supply Chains Act to address supply
I'll teach you when not to long. If you want to take these shorts, losing the tutor May on the 5-minute time frame as well.
Too many of our constituents are
It
still
was a
facing high
dumpage right
prices
there,
and
and that's when we knew things were gone.
we need to do everything.
5 minute and 1 minute are very, very structured time frames when it comes to the 1 minute.
Realities that
Teaches you a lot about where we're going.
And
Sorry.
there seems to be a disconnect. While the economy
In fact, my name is Mr. Brooks, and I'm Mrs. Also
well,
Brooks.
here on the ground, people aren't really feeling that.
Sorry.
So, Mr. Powell, can you talk about, from your perspective, just what is driving this disconnect between traditional economic indicators, such as GDP growth and the stock market performance, and the tangible benefits for families?
I'd be glad to. So it is clear that the overall aggregate numbers are just very, very good for the economy. 4% unemployment, inflation down to 2.6% last year, and the economy growing well in excess of 2%. These are good numbers. But what people are feeling is the results of several years of inflation, and particularly for people in the low and moderate income category, they're really feeling it. So if you look at the earnings releases and press conferences that they do, that companies like the dollar stores and things like that do, who deal a lot with low and moderate income people, they're all telling you that those consumers are feeling really strapped. So we do understand that, and we try to keep that in mind, even though we acknowledge that the overall data are good. We see what people are feeling, and that's inflation. So it's just another reminder.
Thank you so much. God bless you.
Inflation and how bad inflation is for people. High
Look
inflation.
at those balls in the jar. Boom. Oh, wow. One ball went, 2 balls went flying out.
Back to 2% and keep it.
That was unique.
Thank you. One of the big areas that I focus on, you've heard many of us across the aisle talk about the housing crisis that we have in this country. And I know a few others have asked questions previous to me about this, but I would love to follow up afterwards with specifically what you think are the short-term and long-term things that we can do to really address the housing supply and affordability crisis. I have legislation that looks at things like reducing regulatory barriers, zoning reform, these things that we know we can, in partnership with local governments, make a significant difference. And so if I could, would love, again, to follow up with you, even cutting red tape, those kinds of things that we can do long-term and short-term. But I did want to mention one last thing in the 20 seconds that I have. The Fed listens, things that you do, activities that
She gonna
do.
cry?
Could you talk a little bit about that as well? Because working people, a lot of times people don't feel that they have a place in these kind of conversations. But can you talk about what the Fed does with Fed Listens?
So briefly, we did this as part of our review 5 years ago, and we do it on an ongoing basis now. And the idea is that we break out from the usual people that we talk to, which is a pretty diverse group, and try to deal directly with people who are experiencing the economy and our policies. And it's quite eye-opening to listen to people.
Finally getting some bullish divvy here.
A person at the Chicago conference 5 years ago who said the expansion
Swing down on price with a swing up in the RSI.
just reaching my community, and he talked for some minutes about how companies were going into prisons and finding people who weren't going to get out for a year or two and training them, stuff like that. You could hear a pin drop. It was very telling stuff. So I think we learned from all that, and so we'll keep doing it.
Well, I will end by saying there's a famous quote, I think it's Martin Luther King, we may have come over on different ships, but we're all in the same boat now. We need to get it together. Thank you. I yield back.
Thank you, Senator Blunt Rochester. Senator Marino.
Chairman, thank you for being here. Thank you for taking the time on the phone the other day. Appreciate that very much. Just to ask you a broad general question. When you increase M2, the money supply, by 40% over a short period of time, is that going to drive inflation?
Of course. Well,
100%.
As I think we discussed, monetary aggregates have not been a great predictor of really any other thing. But I think when there's a sharp increase like that in M2, then that could, that's something that might cause some inflation.
You can't say no
Now,
if you have a brain.
Just to be clear for the people watching, that happened because of public policy in this institution here, correct? In other words, there wasn't a civilian-led effort to increase government spending outside of the elected leaders that chose to make those decisions.
I think that was part of it. I think there were just a lot of causes in the inflation that we saw, but that, it's fiscal policy, it was monetary policy, it was just closing and reopening the economy, just generated a bunch of confusing signals, and then a lot of inflation everywhere in the world, really, whether people did a lot of fiscal policy or not. So there were many factors, and that's, I would say, one of them.
But just to be clear, it wasn't the citizens of the country making those decisions.
They were giving money away, man.
Leaders choosing to close the economy.
Zero interest rates.
Decide one day to close, didn't decide to not be able to go to work. Those were decisions made by policymakers, correct?
Yes.
So it's a little disingenuous.
To 100,000 subscribers, this is the month.
Colleagues
on our way, baby.
About how they care so much about inflation when in reality they caused it. But I don't want to continue that. I'd ask you a question just out of curiosity, because you worked at the Department of Treasury. At what point did you think they were going to run out of ink? Did that concern you, that maybe it was possible that they were printing so much money that the Treasury would have to find alternate ink suppliers?
Didn't occur to me, but good question.
So along those lines, something that concerns me a lot is the idea that we would even look like China in any way. So can I have your commitment that as long as you're the chairman of the Federal Reserve System, that we will never have a central bank digital currency?
Yes.
Thank you for that. I think it's extremely important. It makes me very happy to hear you say that. Shifting gears to a little bit, something that matters to me and entrepreneurs all over the country is, why can't I wire somebody money at 6 p.m. Eastern time? Can we get to a 24/7 scenario where wires are cleared every day, all day? I think that would be very, very helpful to businesses all over the country.
So that's coming.
It's called cryptocurrency.
We have that at Fed Now. We'll get in touch with you about Fed Now.
Like, we already have it. Like, isn't that crazy?
Between two banks.
It's called blockchain, dude.
Others want to
24/7.
Yes, we do kind of lag a lot of other countries.
Like, we already got it.
It is time.
It's so funny. Like, it's called XRP Ledger.
To put you on the spot, it's Fed Now. I was very familiar with it, but it's
Fed
a little
Now.
bit late in coming. Can we get a commitment to do that this year, so that by the end of this calendar year, businesses can transact 24/7 and settle payments?
Well, I think they can do that now I believe they can do it now on Fed Now, and they can also do it on the RTP system as well. So I think it's available. Let me check in and I'll follow up with you.
That'd be great. One
looks like we're dumping to 95,700. That would be the target of this bear flag move.
The Fed can do
if we can't get this divergence to kick in, which doesn't look too strong, to be honest.
For example, Hamas, Hezbollah, Iran, the
slow bleed again today.
That are funded by places like Qatar. Do you think that we're doing enough to keep them outside of the banking system?
Qatar, isn't it Qatar?
Because at the end of the day, terrorism is ultimately funded by these bad actors. I met with the hostage families this morning. It was heart-wrenching to hear stories about kids that are my kids' age being held for almost 500 days. The Qataris are obviously completely complicit in all this. What can we do? What advice would you have that we can do to make certain that we bring these terror groups to their knees?
Is he the president?
We do enforce the money laundering laws very, very strictly, and but it's a tough question. It's a huge focus in international meetings and things like that. But you're right; it's really hard to nail it down, particularly if it's all happening overseas. But we can do what we can do with our banks. We don't want to make it so costly, though, that they debank people because they're so worried about violating the anti-money laundering laws. I mean, that's some of what's happening, according to the banks, is that they're so afraid that there might be money laundering that they just cut people off at the first flag, as opposed to perfectly legal businesses are being thrown out because of their fear of being caught doing money laundering. So I think there's a balance there. But no, it's a really, really hard project and one we spend a lot of time on.
Thank you, Chairman.
Thank you, Senator Marino. The patient and persistent Senator Kim.
Thank you. I wanted to make sure some of my colleagues had a chance to be able to run off to some of their meetings. And I've enjoyed being able to listen to the chairman, to be able to hear some of your articulation here. I just want to share with you, I did a telephone town hall last night, and I'm glad to hear some of my other colleagues as well. And there is a lot of anxiety right now by the American people in trying to understand what's happening and seeing and interpreting what's happening on the news. I guess I just wanted to ask you, if you were, for your words of how you would explain to the American people the importance of independence when it comes to the Federal Reserve.
So I think
there's the dump there, down to 95,007 is the target. We just lost key support. It looks like we will head to 95.7. Another now, you can see there's a bit of rain here too, 95K. So now you're seeing a little red move here, 95,000.
If we start putting up political filters, we'll be no good. We'll be less effective at our already quite difficult job. And I do think that's broadly understood. I think there's broad support up here in both political parties and on both sides of the Hill. I think that there is a decent degree of support for continued independence. That's not to say we shouldn't be accountable. We should be very accountable and transparent about what we do. We should be up here explaining what we do and why to our oversight body, which is this committee and then the same committee on the House side. So that's what I would say.
Making decisions about your core mission about stability and about growth, but not thinking about it in terms of the context of an election cycle, for instance. Is that right?
Yes, exactly.
I wanted to just shift gears a little bit, but similar type topic. There's been a lot of attention to the role of public servants within our government and, our understanding of what roles they play, how many to have. And I guess I just wanted to ask if you could speak to the role of the Federal Reserve employees, their qualifications, and more importantly, like their importance to the mission and being able to engage. How important are they to the work that you are trying to do towards stability and growth?
So I'm very proud to be associated with the people of the Federal Reserve, and I'll give you an example why. When the pandemic hit, kind of out of the blue, and economies all over the world are shutting down, the U.S. Treasury market is stopping to function. Companies can't roll over their commercial paper. Economists are writing about a depression. People at the Fed who went through the global financial crisis 10 years before step forward and say, we got this, we know what to do. Here's what we do with the Treasury market. Here's what we do with money market funds. Here's what we do with the companies that can't get any financing. The markets were closed and companies were having maturing debt that they had to roll over. The people
see the dumb, man. We called it for you there, and then
dire
just
emergency.
A little head and shoulder,
Federal
and
Reserve and other places. But I will tell you, it was impressive.
symmetrical triangles mainly break down. Kind of was a diamond that came in from the bottom, so it has to leave the bottom, even though it looked like it came in from the top.
And how much they know, and how well it worked. Really, our work during the acute phase of the crisis was very successful, and it's entirely due to the knowledge base that resulted.
Shout out to everyone sitting here watching this entire thing with the insanity.
Would you say that the Fed is overstaffed?
No, I would say that, overworked, maybe not overstaffed. Everybody at the Fed works really hard. It's a place where people work.
And a lot of this conversation right now about staffing numbers at different departments and agencies, it's going back to this sense of the taxpayer dollar, in terms of accountability there. But I guess I just want to ask you, is the Fed paid for by the taxpayer dollars? Can you explain to us what the burden is on the taxpayer?
So we're self-funding through our large balance sheet.
So when it comes to the staffing at the Federal Reserve, not coming from the taxpayers, is that right?
Indirectly, we give away all of our profits. We give back to Treasury, and those profits would be higher if we didn't pay for the Fed. So in fairness, it's ultimately paid for by the taxpayer. But in that sense, we're self-funded.
Self-funded.
Yeah.
Just one last question here. You talked about the different actors that are involved when it comes to levying tariffs in terms of paying that the exporter, the importer, the consumer. You said middlemen could be part of that. I guess I just wanted to ask you, do you know of any way in which to 100% guarantee that the consumers will not have to pay higher costs when it comes to tariffs?
Not really. It's not going to be easy to identify with any accuracy exactly where costs do fall, but I think it'd be hard to guarantee any particular outcome. I think we're just going to have to see.
Great, thank you. I yield back.
Thank you, Senator. Senator Warren, did you?
I do. Thank you, Mr. Chairman. I just want to make a point before we quit here, and that is about law enforcement. If you keep the laws the same on the books, but you fire the cops, you're going to have a lot more crime. That's kind of law enforcement 101. And the problem we've got right now is law in the books about consumer protection hasn't changed. But the cops, at least right at this moment, have been told at CFPB to stand down. And I appreciate that we have state AGs who step in, and often they partner up with the CFPB. But there is no one else for the giant banks who actually does what's called the bank examination, the supervision. And that is so important. Remember the Wells Fargo scandal, where Wells Fargo was illegally opening fake accounts in people's names? You find that through bank examination, not because the person who got cheated could figure it out. Bank of America gets hauled in because bank examiners discovered they were charging people illegally on junk fees. Nobody finds that but the people who are down in the banks doing the bank examination on behalf of the consumers. Look, we tried a patchwork of law enforcement for consumers before 2008. We had all those laws scattered among 7 different agencies, and we saw how it ended. It ended with millions of people losing their homes, millions of people losing their jobs, millions of people losing their savings. The CFPB is our law enforcement agency to make sure that the giant banks follow the rules on consumer protection. And for me, right now, I'd be really worried about doing business with a giant bank when there's no cop on the beat.
Thank you, Senator. I will recognize myself for just one question, and it'll even be relevant to your job, I promise, Mr. Chairman. So thank you for your patience and for being here. I wanted to follow up on there were some questions, or at least I know Senator Rounds asked a Basel III question, and your response was basically, let's get the people in place from the administration, and then we'll proceed again. Treasury Secretary recently.
Watch this, is about to dump again right here. Look, boom. That's going to be a fast dump down at 95.8 here for Bitcoin.
And given that assessment, or if you agree with it, could you discuss the necessity?
Big time frames did look bullish today. We still have liquidity above us, but the small time frames collapsing, and that's why I have to watch the small time frames. That's why I tell you I have no idea what's going to happen to Bitcoin. I have no clue.
Big Wall Street.
I go every day and figure it out as it happens.
And what considerations?
That's all I can teach you to do. I teach you how to handle a constantly changing market. Is all I do.
Concern comes and goes. And for those of us who have largely regional banks, or God love them, the best of all, community banks and credit unions, a competitive system is really important. So if you could just answer that, and then I'll wrap up.
Sure. So we're eager to get together with new colleagues from the FDIC, new leadership at the FDIC and the OCC, to try to finish Basel III. My own view has been that our banks are well capitalized, and Basel III was not supposed to be an exercise in raising capital in U.S. banks. Mario Draghi said that. Dan Tarullo said that back in the day, I believe. So I think that's about right. We have some work to do, but we'll get there, I believe, fairly quickly. In terms of your regionals, they don't face the GSIB surcharges. They don't face quite the burden that the large banks face on resolution planning and that sort of thing. So we need those banks to be healthy and profitable, because we need them to compete with the GSIBs. We don't want a world where the GSIBs just keep getting a bigger and bigger share of the economy. That's not what we're looking for, and that's what a lot of pressure. We've seen the number of community banks, especially, declining for 30 years.
Yes.
And this is not something we want to. We don't want to be the cause of that. If it's happening by natural causes or because of evolving technology, that's one thing. But we don't want to be inadvertently causing that to happen.
So as you look at a Basel III exercise, can you think of anything specifically that ensures that competitive, diverse banking system is maintained rather than a consolidation, whether it's fewer community banks into more regional banks or fewer regional banks into more Wall Street banks?
Well, I just think you think twice before you impose the kinds of things that we impose on the largest banks and the next to largest banks. You want to be careful not to just think we should do exactly the same thing. It's what tends to happen is, so for smaller banks, it raises costs is what it does of banking, and it makes it harder to start new banks and makes it harder for any but the largest to be successful. So that's not what we want. We want a lot of competition, and these regionals. It's important that they thrive.
I agree, and I agree with your assessment. So thank you for that. Thank you for staying with us for the day, and glad we could get you first. So as we wrap up, for senators who wish to submit questions for the hearing record, those questions are due 1 week from today, Tuesday, February 18th. Chair Powell, you have 45 days from that day to submit your response.
Finally, a bullish div here that may stop the pain. Eventually, the pain will stop. We will get a daily bottom here. This is your daily wick, and we could get a move back to the upside. I wouldn't be surprised if you end up back above 97,000 and we end up with a long. This could be a massive head and shoulder on the bigger time frame here when you zoom out, right? This could be the shoulder, the head, and the right shoulder. Let's get you on out of here. We took you through that entire meeting. God bless everyone that sat there with me. That was awesome. You're amazing for sitting there through that entire thing. Let's take a look at BTC here on Binance. And let me do my top-down analysis now. I never even really got to finish, and I'm still lost here with what's happening to Bitcoin. Let's get the music back up and running. I'm not done yet because I got to do what I got to do for myself. So if you want to be here while I do what I got to do, you might as well. This stream started with me just doing what I would do for myself obsessively. And I realized, hey, why don't I let people into my crazy life and the way I do it, right? And next thing you know, we had ourselves some content that people actually seem to like to consume. And we had ourselves a channel, and lo and behold, the Crypto Lifer was born. So shout out to everybody here on the live. Thank you for jumping on in. If you sat there through this entire time, over 2,700 people here on the live. Unbelievable. We get the likes up to the watchers. Thank you so much. Over 1,000 likes. And let's get back into brass tacks here with BTC. The comments still flying. We still got so many people here. This is insane. I'm so blessed to have each and every one of you every single day here on the channel. And I really, really appreciate you all. So God bless you all. Thank you so much. If you want to join the trading group, like I made gains last night, you would have been able to see the trade I made and when I got in and out. Hit CryptoLifer.com to find out more. Go to CryptoLifer.com to find out more. Hit the subscribe button where you could subscribe to a monthly, a quarterly, or an annual subscription service. I will be here servicing you every single day, providing charts, updates, insights, my courses, classes, and things all inside of the Discord once you pay. All right, so I have a course in there waiting for you that will blow your mind. I even have a free trading course that's like 35 minutes to get you situated. And I also teach class the last Saturday of every single month here. Hit the QR code to find out more. The last Saturday of every month to find out more about class. A little parched here. Let's get some water, and I'm going to break down Bitcoin on the weekly, and we're going to leave here seeing what's happening to BTC. Could this be our daily bottom? Are we going to get a reversal? Let's not get too caught up in the small time frame. So when we started this morning, when I did my first update this morning, 7:30 in the morning, 7:45 area, it said, hey, this is green. We had a bullish engulfing candle in the weekly, and things looked like, by the end of the week, we should be okay. That has changed in the last 6 hours. Look, things have changed. 5 hours. It's now 12:30, and this candle is now absolutely red with a bigger wick to the upside than to the downside. That's a bearish doji. And that does suggest that we could take a bit of a move here further to the downside. So what I don't love what I'm seeing here for Bitcoin, all right, at all, in any way, shape, or form. We go back to the 3-day chart, and the 3-day chart was looking lovely, oversold in the stochastics, hugging the higher low. It was looking beautifully green earlier today, and it was like, hey, can we head back to the top of the channel? Things were looking our way, but right now, still struggling with a red candle here for BTC. My name is Sam Price. I've been trading for over 15 years. I've been trading for almost 20, really, but I'm 42. When I turned about 24 years old, I started buying and selling stocks. Had no idea what I was doing. Then I got into trading and buying and selling gold. Right, and then I started trading gold and silver on the New York Stock Exchange, mainly JDSD and JNUG. Then I got into Great Panther Limited. I started buying basically a silver miner on the Toronto Stock Exchange. Then I got into Canopy Grow Corp and speculating marijuana companies. From there, I found BTC around $300, researched it, eventually got in around $1,000. And the rest is history. Frank Cardano at 2 cents, Ethereum at $9. Someone showed me in the street, it hit 89. I felt like I was late. And here I am now, just showing you guys after my 10-year journey from 2016 to now, 9-year journey in cryptocurrency. And I'm just relaying all that I've learned from DeFi to trading Bitcoin to understanding how to maintain a crazy market for years on end. And, I've called the bottom for Bitcoin. We've called the tops before. We've had amazing times. And we're going to attempt to do it again every single day here on the channel. So shout out to everybody here on the live. And again, I don't know if I make calls, but I buy at the right time. Like, I say I know nothing but the fact of my own ignorance, but I look at the highest probabilities and I take advantage when the market tells me this is likely the best chance to buy. And so I perfected really where to buy Bitcoin by using the 2-week chart, the stochastic RSI, and this crypto fear and greed index. Whenever this is in the shaded region and the stochastics are below the dotted line on the 2-week chart, I am snatching up some Bitcoin. If you can see, look, 1, 2, 3, 4, 5. Every time this was 1, 2, 3, 4, 5. Anytime the stochastics are below the dotted line, it's telling you that is a massive steal and a discount bargain price for Bitcoin. Back to the weekly chart. So we do have bearish div on the weekly. It did, some say it played out, and we're hugging a higher low now. We should have dumped way more from bearish div on the weekly, and I actually agree with that statement. That gives signs of hope for the bulls because bearish divergence is so strong. The fact that we were able to push this hard after it, you should just really collapse after bearish div, but you did not. So that tells me there's a sign of hope. But right now, on the weekly chart, the weekly chart is seeming right now, in my mind, losing the trend line. Like if we open this trend line up, it's getting a little weird. And what I mean by weird is once the trend line starts to flatten out, it's not a trend line anymore. And you don't want to see that. That's not a good look. So now we're going to look here. And shout out to the 300 people here on the live. That's unbelievable. Retention is unbelievable. I don't know what was happening yesterday, but YouTube seemed to recovered hard. And people are really wanting to see what's happening in these markets. I guess good keywords too there. So we're getting a bounce off this bottom trend line on the 3-day chart. It's still holding the trend on the 3-day. It's acceptable. And we really want to see this bounce. Today, by the end of today, I'd like to see the 3-day candle close above this one. Above where this one opened at about 96.6. So to me, that would, be preferable. We take a look at the daily, and the daily was looking beautiful. Another green candle. It has turned into a bearish engulfing candle. That closes today as such. That's going to be bearish. So I'd like to see if we can recover throughout the afternoon. We are oversold, but right now, that's a bearish engulfing candle on the daily. Things looked so much nicer this morning. They have flipped on us. The 22-hour time frame has closed. And our next candle here is also bearish. As I've said before, if we close a candle below the 200 MA on the 22-hour time frame, I will become more of a bear. And I'll be looking for targets at 90,000, and then we'll go from there. If we can hold this yellow line, I'll remain a bull. It looked like we did doom. And then, as far as I'm concerned this morning, I was pretty convinced we were on our way further to the upside. I was. And I just needed to make sure that, I knew to watch the small time frames for confirmation. And what happened? They didn't give us that confirmation. I'm going to show you how to avoid pitfalls for the rest of your life. You're in a trade like long-term in the 4-hour. You want it to play out. You've got big money on the trade. Things are going, and then all of a sudden, I'm going to teach you how to possibly avoid some of the worst losses in your life. All right. Ah, there it is. I finally did it. It's still a bit of an Adam and Eve double bottom here that's holding us down, just toying around. And it does suggest that it could still break to the upside once we crack this neckline. At the same time, you take out this low, you take out this wick, it's a wrap. So we're watching Bitcoin very, very closely here. Almost feels like it broke out and it's retesting this top trend line. See, like it broke out. Almost a bit of a retest here. Could it come down for the retest? So still an Adam and Eve on the table. Not terrible, but the 4-hour does want to take us down. Man, we're basically at the precipice of what could be bullish or bearish. You take a look at the 1-hour time frame and exactly what happened. Like this morning, we were in a flag, and this could have making a beautiful bounce, and then decided to to pump off the 200 MA, and we were just going to be golden. This is kind of the look I was looking for. I was at a trade, moved the stop to break even. I saw another scalp. They took that scalp down, which kicked me out at break even from my trade that was in last night, and then there we are. So we collapsed on, and again, when one candle closed below the 200 MA, it did tell you that there's some sketchiness there. What I am looking for, here's the hope for the bulls. Here's that hopium. Let's make an inverted head and shoulder here. Let's find some type of higher low, making a symmetrical triangle, an ascending triangle, and get ourselves out of this mess. Otherwise, Bitcoin's going to fall. If Bitcoin takes out this low, I'm telling you, at 94.8, no go, right? It means we're going to be coming for that liquidation event that we had there at 91,000. And you really want to see this low, that high, that higher low hold, and see Bitcoin bounce here. So we're looking for a bounce for Bitcoin. It's kind of needed right now. Like, you really want to bounce for BTC. And you can even kind of make this bigger. And so this is where we stand now. Look. So I'll get out of here for now. And now I got a pretty good sense of what's happening to BTC. Again, we're inside of the bigger symmetrical triangle. Sad to say, these mainly do break to the downside. Doesn't mean it's guaranteed, but that's what we're seeing for Bitcoin. Sorry, I kind of like... The target takes you through that high volume node right to that area 102.7. And the dump takes you to the basically to the danger zone. Breaching back inside the pattern, back to the bottom of this wedge. And it's not a great look. So this is what we see. And I got to tell you, 90% of the time, these break to the downside. It'll be awesome if we get the break back to 102. It saves the day. And honestly, what happens in the next 2 to 3 hours will determine the rest of the week. So if 4 or 5 hours from now we bounce, this turns into an inverted head and shoulder, I'll look for a move and boom, we could long. If this gets tight and just collapses, which is the likely scenario, we go to 93.3 and it just changes, then we could be barely retesting and we could start seeing 90 and 89K again. So today kind of tells us what's going to happen to this market. Be very, very careful. It does say a short is in order. Either way, I would see consolidation inside the nose of this triangle. So I would watch this. I would draw this for yourself. Watch this on the 1 hour, 15-minute time frame. And the one point I wanted to say, when this all started to collapse, we lost the 200 MA on the 1 minute. See this yellow line, the 200? That's when we started to dump. We also lost it on the 5-minute time frame. And that's when we started to dump right there. See? And here we are looking for a bounce or a continuation. If you're looking for the continuation, draw a flag on the 5. You'll stay inside this flag, and this flag will just continue to dump further to the downside. So, yeah, it looks more bearish than bullish for Bitcoin. Sad to say. And the 1 hour is struggling to see if it could bounce. It looks like this may continue to dump. We may not even get a bounce off this bottom trend line. So watch your 5-minute, watch the flag. If the 5-minute can reverse somehow off divergence, then we'll get a move on the 1 minute back up here. And so that's my full-blown analysis for Bitcoin. Can we hug this Adam and Eve double bottom on the bigger time frame, you see? And only time will tell. If you're in Florida and you've never been to the state fair, go to that state fair. I just didn't know what I was getting into when I went there last night. It is insane. It is the biggest state fair I have ever seen in my life. There was 3 Ferris wheels. One was giant. 3 Ferris wheels, though. Like, picture 3 giant Ferris wheels. Rides I couldn't believe. It was pure insanity. One criticism I could say, the food could have been a little better. But besides that, I mean, it was fair food, right? So may God bless everybody here on the live. Thank you for jumping on in. I appreciate this amazing long live stream. Shout out to anyone that signs up, joins the trading group, supports me, leaves a comment, or whatever you guys do. And gals, I'm so appreciative of everything that everybody sends my way. For the next tumble stream to the next time, remember, someone called me privileged yesterday. And, the idea is, what? I am privileged, right? I am the sperm that made it. Of the millions of sperms, like there was millions of sperms making it to the egg, but my sperm made it. What a privilege. Each and every one of us are all privileged that we were the sperm to make it to the egg, right? Think about it. Like billions of years and a microscopic move determined of us all being here right now. So we are all privileged to be alive in this moment in time. We somehow made it. I don't know how we did, but we did. And we're all here together. So your life is a blessing. Take every moment as a blessing. And I'll see you all tomorrow. May God bless you for a wonderful day. Amen.